All right. Good morning. I'm fine. I'm not happy, but I'm not gonna overreact either. So there's some things that are good and great. There's some things that are so-so, like just don't know yet. But obviously, yeah, I mean, if you're in AMC, you're probably pretty excited about being up 7%, 8% all of a sudden. And then we're at 6.5 right now. I'm not likely gonna stream all this, and frankly, right where it's at right now is a pretty critical spot. So we'll see. I'm very much in the camp of I'd like to run, but there's a lot of check boxes here, so we're not actually out of the creek. So as much as I like the melt up and the excitement of a big huge volume influx, it's a lot of volume. The move itself, what's the right way to put this? So without being maybe a bit too pessimistic, the move itself is sort of expected here because you already had a really good setup off this bottom. My biggest gripe here was that it did not check 279, and it did chop along 279 quite a bit. Maybe that was enough. I just felt like we didn't quite get that back test. I'm really not sure why we came back to like 280, but we didn't hit 279. It really just kind of bugged me. Like on this bottom, I don't know. And then when you push up here, the way I have this set up, there's this idea of like iteration is that if you have a build out that gives you kind of a layered breakout, which is typically the way that I see it, then it would make sense that once you pass by the larger of the creeks that you would have a pretty big melt up to the next one. So we had a large space from like 280 right here all the way up to about 320. And so I was thinking that when it did move from 280 to 320, whenever that happens, that we would see a pretty significant push. I thought we would get 279. I didn't hold out for it, if you're wondering. I mean, I know it sucks if you were on the Discord and you heard me say I thought it was going to... I got it mostly right. I thought when it came down, I said I'm probably going to come down. I was like, it may get a little pop on FOMC, and it did. It was really small. And then I said I thought it'd probably come down to near 280, and then back to 286, and then back down to 279, something like that. That was kind of the play-by-play. Very close. Not quite right. It didn't actually go back down lower. It made a higher low here from the bottom, which is fine. It is what it is. This is a really classic breakout. So you have an M cross here. This returned back to kind of center liquidity. So you can go back and look. This is something that, like, you know, and I've kind of shied away from using just like a fractal based analysis, but some of the earliest stuff that I was doing was based on this thing called the master fractal. This looks almost exactly like it. And the concept there is not lost on me. The idea of building out against a resistance and then like pushing it and then coming back and retesting it. Pretty straightforward stuff. But usually it comes back to this I call it like the lower M, right? The lower wave. And it did, which is interesting. I'm still confused as to why we did not hit. Maybe it was just a carrot. I don't know for bears, but we didn't hit 279. That kind of bugged me. Anyways, so the next layer here, if we're going to like look at this in terms of layers, this is a huge influx of volume, and it's a great first move. It's not exactly over yet, and you can't ship it just yet because we have to sort of get back into this parallel structure. This was something that I had brought up to everybody's attention a few videos ago, maybe a while back, and I've been posting about it at various times on the Discord as well. But I don't expect everybody to remember every chart that I've ever made, so that would be unrealistic. But this one, the most important thing here, and I just went over this in the last one, was getting up above 316. We're not there yet. So, you know, as much as this might be like, hey, this is great, it's a nice big move, you really aren't out yet. We're not out of the biggest downtrend. And that one is up here again at that same breakout zone from like 316 up to about 330. This is going to be your SOS locally, your sign of strength over this top. You need to make that higher high. So far, we've been doing a really good job of that. But right now, what I would say is that this looks like the higher high above this peak right here. This is another iteration. So you can see why I have a little marker here going above 295, because my thought was that that could be a good way to end the day today. If they wanted to pump it on a Friday, you could actually stop short of going and just kind of stop right here at 295, and I would be okay with that. But on the grand scheme of things, you do want to get above this area, which it pushed into. You want to get above 3. That's pretty straightforward stuff. I mean, most people are going to look at 3 as a support and resistance anyways. So trading around it is fine right now. We want to see it kind of push and test it. I'm looking at it for other reasons. It does just so happen to be like right at 3 right now, or like 302. I was looking at it because of these parallels. I don't know if you can see them very well, because my chart, again, charts can be kind of messy, but I'll try to tone this down so there's better contrast. This was more of like a wave measurement tool anyways. I'm not sure why I left it on the chart, but it's there. So these guys, these parallels running up, they're the ones that I think take you out. Like, I think they build the structure as you come down. When you talk about wave analytics, you're talking about resistance, again, just like this, resistance and then support. And so you have that on the way down, but it's kind of the opposite. You have support and then resistance. Support, resistance, support, resistance, support, resistance. And it did that all the way down. It kind of stair-stepped down, and each one of these is like a buy up, buy up, buy up, buy up, buy up as it's going down. And then when you reverse, you want to see that where there was a support resistance mark, you're now meeting it and you're returning it to support. It's not resistance now. So again, the expectation would be that you follow those parallel structures out. And again, I have a lot of different structures here. I've been doing this a lot of different ways. So right now, I think this is the wave chart. Yeah. And I can get rid of that. It's not a big deal. This does imply that you could be up near 7 very, very, very soon by October 1st, which is about, 10 days away. And I think trading days, it's obviously a little bit less, but nevertheless, it's about a week away. And I had thought that maybe this next Monday would be a better time to take off. So I still don't think we're out yet. And again, this creek coming down, if I may, is probably the most significant passage point. And you could, in theory, up thrust above this and still drop. You could just bonk your head on it. There's all kinds of like what if scenarios. So definitely do your best to watch that level at 316. That's going to be the big one. And today, if we got over it, that'd be pretty amazing. But I wouldn't necessarily count on that today. Remember, when we ended Friday the 24th, we ended at like 293. I think we were like 291, 292. So could we see a repeat of that? Perhaps, you know. And then look at the grand scheme of things, and you can see like this is a lot of volume, but we need to see that sustained volume. We've seen these kind of pumps before where they pump really high and then come way back, pump really high and come way back. We don't want that. We want to see like a sustained move. So if it does pump up, we want it to hold support. Like we don't want it to slide right back down. We definitely don't want it to come back down, I think, to 279 now. I think that would be kind of crappy. It's a bit late for that. So GameStop not moving very much. But again, I don't know if this was really something that I even really cared that much about. I had said, I think on the Discord, that I didn't really feel like a Friday move was necessary because there was a lot of places you could end up today. I thought AMC could end up lower, like even down below 271. Like it's possible before you leave to go ahead and go back and check certain things. Once you exit the creek and you're like moving up and you're way above where the last resistances were, then you don't really want to come back down through them. That's not typically what you want because that's a pretty serious weakness, because just showing you that bulls aren't holding that support. And you want to see resistances turn into support. You don't want to see them just melt under pressure. Well, you want resistances to melt. You don't want supports to melt. So you don't want to see those previous resistances just kind of melt when you come back through them. So I was looking at this, and this is, again, pretty classic, like M shape here. I don't really have a lot to say about that, except that it didn't really surprise me that it didn't go. Again, this was another one that I had looked at, and I thought that we could technically come you can see it on my chart, we could come all the way back here and probably be fine, you know, into Friday. So for me, dropping, I was thinking like we go down to 23, like who cares, you know? As long as we get that hit and come back up, it really shouldn't phase us, because this kind of stuff happens all the time when you do back tests. Given that it's not doing that, right, would you say that it's bullish or bearish, Booksy? Well, I think it's very significant right now that GME is on the line. Like you see this pink line coming up, it's kind of pinkish and reddish. It's very, very significant. So that's a very important marker for us. If you recall in the last video that I did where I was saying like this is a really ripe setup, I think it's about to go kind of thing. It looks really good. This is actually the same level from way back here. If I can get it to zoom out correctly, I'm getting a little bit of lag. I'll answer your question, Alex. And I don't think it's going to get there by November. I think you're going to get to maybe like 7 or 8, and at most like maybe 10 on an extension. I don't think you're going to get to 16 by then, but that's my opinion. And I could be wrong about how high it goes. I mean, technically, I think it goes up to 1960, and I've been saying that for quite a while now because of shift variables and all this other stuff and where that lower gap is. I don't necessarily think it's going to go to the 35 to 45 region right away. I think that happens later. And I do think it will happen, but I think it happens later. Possibly even like a year down the road kind of thing. So I'm not going to get into that right now. But the highest we could go right now, I think, is like 1960s. So, I mean, in theory, could you just do it all at once? I guess. It really makes more sense to do it a little bit later because of the setup. And so I thought of it in a two-phase move, right? One move now and then one move maybe in December or November, December, going into January potentially. Could be another January move, but I was imagining it actually as December. Seemed like a weird day, but that's what I saw. So anyways, if you look at where we are on GME at 26 and you were to track that backwards, you'd actually see that that's the same region that we were on May 10th. Like, we're basically in the exact same spot we were on May 10th, according to the parallels. Now, obviously, could this make you like super hella nervous right now? Yes, it could. because just like this is needed for like a breakout, it would also be potentially used for like a rejection. And then I don't think it's a coincidence that we're also like in the same spot that we were on May 10th on AMC. You know, we talked about that connection over the last several months, but specifically like going back to like, I guess back here in April, we were talking about it and why this region was likely going to be used, you know, to trade and then potentially try to push down. And then lately, especially in the last few videos, I've been talking about that correlation. Why would that make you nervous then, Booksy? Well, let me put it this way. Back in May, we were coming at it from a different, May of 2024, we were coming at it from a different angle. We had pushed up above it and then come back down, and we had chopped through it, but we really had landed on top of it. You're kind of seeing something like that. You know, if you look at the dip that occurred maybe first thing in May, like last few days of April last year, we did dip below, I believe that's 295. We did dip below that and then came above it and landed on top of it, roughly speaking. But like, it's just different. You know, if you look at this in the whole, you can see a similarity there in that, yeah, we built out a pretty large support on that 278 area after pushing up above. Really just chopped on 278. So again, like that 278, 279 is what I was saying. I think that's the most important level. I don't really want to come below that now at all. I don't think you want that. I think if you did make a higher high here, and for whatever reason, it still needs to come back because we did push over 295. I still think it's possible we could survive that 279 back test because it was, again, a floor. But because, I mean, if you simplify the chart, it's not really like, it's not as scary as it might seem. So like if you came down and you just like hit this, which is what we did, and then you drop below, and then you do an M cross up above it, right? And this is where I'm kind of like, I don't know why we didn't come back to it. This is why I was like thinking we'd come back down, because I thought we would come back and hit 279 and take off, because this did not make a higher high at first. So I was thinking, oh, we're going to hit 279 and take off, right? I'm just showing you like a tiny little example. But instead, for whatever reason, we hovered at like 280. And I was like, that's why I was saying I didn't really understand why we did that. So now we've made a higher high. So now we've pushed above. Again, this is just an example I'm showing you. I'm not trying to chart something in the future here. I'm just trying to show you like on a level what I'm talking about, because it's the same pattern that we have. Now we've made a higher high here. We've pushed up. It's not inconceivable, although it would be very painful, I think, at this point, and it would possibly be a weakness that we'd have to address later on to come all the way back down to hit it now. In theory, though, like, is that a possibility? Would it break the chart? No, because you're just doing a back test on that level, and for whatever reason, we didn't do that. So we did something similar at 271, and we didn't ever come back to it. So I don't know. Maybe we just won't. So I'm not trying to like rain on anyone's parade here. I'm hopeful that it doesn't happen. I thought we may even end the day around 295, which is kind of where we are right now. So I know you guys are like, what? You mean it's over? Well, there's other reasons for that, and it's really just this. Like if it did this, right, that would be 295. So if it's strong enough, it should hold that level. It could keep going today. I'm not saying it can't do that, but I think that it needs to kind of hold up before we move on. Strength tests are really important. So anyways, is it possible that this were to come all the way back down, that it could still run? Yes. However, the biggest problem with that, and you can see it even on this little example, right? The biggest problem with that is that it does read as a UT, because you're going back through, you'd have to go back through this creek, right? I'm using like a little example. You'd have to go back through this one to get there. So you're basically like breaking down through what was a resistance, you're not even holding it as a support. And sometimes that's bearish. I mean, like a lot of times it is. This could turn into a really bad situation really fast if it continued to kind of like hook and drop. You can see like a head and shoulder form and then it would drop, right? Because again, this is already like laid up. And then again, you can look at it like this way, right? It laying up and dropping down. So it could survive coming way back down, but it would be extremely nerve-wracking. And then in addition to that, I guess my biggest kind of like, here is that we're sort of approaching this from the opposite direction. And I would have preferred if we had been up high on FOMC, for example, and then come back down to 295. I think that would have made me a little more comfortable than like going up into it on a Friday where you're having to kind of wait it out and see if it holds. So don't hear me as saying like this can't be bullish or something, or like he's just trying to make it bearish or something like that. I'm not just trying to make it bearish. I promise I am doing, and Weeble's running. That's a big fat candle. Holy smokes. I got some calls, so I need to check those out. What's this about Weeble calls, Booksy? I think Weeble's going to top off around the 14s and then come down into October. But I need to catch this trade right now because I had kind of a crappy position that I didn't get out of this week. So I'm taking the exit. Taking it back. Taking it all back. You don't know what that's from, then I don't know if we're friends. I don't know what it's from, Booksy. If you're in your 20s, you may not know what it's from. If you're older than 30, you should know. Actually, you may not. I guess it's possible. You don't know. I don't know. It's a possibility. Yeah, I thought it was going to get up to like here, 1350, 1345. So it's about as good as I'm going to get here. Not bad, dude. Not bad. I might actually make some money on this. I was very red this morning. And I was like, you know what? I'm going to hold on because there could be a Friday move. And I'm glad I did, I guess. It looks like it's about to crap out. I don't know. It's already overbought, so. You guys like, why are you watching this? I'm not watching. AMC's not moving right now. It just kind of came back down. We'll check it out. Wow, that got crushed really quick. Well, should have just taken what I could take. I could have got a profit if I had set the limit order, but this is a rough one. It's crazy, man. I had 13.5 calls for this week, and they're getting like decimated right this second. But I mean, that makes sense. They're expiring today, so I don't know. It's weird because the market, to me, it was like I saw everything pull back before FOMC, and I thought that's odd because it's already like come down, and it was most of the stuff that I'm watching had like come to lows, and I'm thinking to myself, if the idea was to sell the news, which is kind of what a lot of people were thinking what might happen, if the idea was to sell the news, then why would we bring it down? You know what I mean? Like going into that day, like it was very obviously being brought, a lot of the stocks that I watch were being brought down into that FOMC. I'm like, that doesn't make any sense. Yeah, it's kind of backwards because there's nowhere else to go. I mean, you could say, yeah, they're going to sell off or something, but to me, I'm like, well, they're not exactly in a position where they could keep selling off. Like Weeble had already come down pretty far. I mean, it was sitting over here, but I was like, this is FOMC right here. I was like, what the heck, dude? It's already back down to its floor. Like, how much lower could it go? You know, and it didn't go that much lower. It went like 20 cents lower. But it was really odd then watching that double flush on the day of. I'm like, okay. Like, where are they going to go? Like, They're just chopping it up. So I had all these bullish contracts. I'm thinking after FOMC, we're probably going to run up into Monday. And man, it talked about like an act of faith. I just kind of held some of them. Nvidia was like that too. I was down like 90% in my positions. That's insane. That's a really bad place to be, by the way. Don't trade that way. But I had like no reason to just cut it. You know, I was thinking to myself, like, why? You know, like, why would I cut it? Because I knew that it should have been up near like 180. And I'm like sitting here thinking to myself, I don't understand the market right now. Like, why is it doing what it's doing? I don't know if I'm going to get this. I may have just waited too long. Anyways, so it was a stressful couple days. I was like, man, I need exits here. So what happened with Nvidia was it rocketed. You know, it set up really well, rocketed, and I got all my money back. I didn't make money on it. I didn't make any money on it, but I made a very, very, very low loss, which is great, and I was really happy that that had happened. I was like, wow, I could not have gotten out closer. And if I had held it, I might even have made money. It went up the rest of the day. It didn't do so well after that, but sometimes it's really about just getting out of a position, you know. See, in this Weeble position is really ticking me off. It's a good sign that it's way up like this, but I don't know. It needs to make a good push. And I don't think it's going to do it till like next week. I'm very doubtful that it pushes all the way up today. I thought it was going to kind of push up once right here into this pocket and then come back down and then Monday go again and maybe hit like near 14s. So it's out, which is great. It's out of its creek. So I don't know. Can't complain about that. Why am I talking about this again instead of AMC? Well, I mean, to be honest, we kind of covered what we need to cover on AMC, though there are some things that I think are worth investigating on the local, like really short-term time frame. The bigger picture is you do need to get over like 302. You need to get over 315. The 295 area seems like a pretty logical place to rest if you're going to rest today. If you're not going to advance, but you're not going to fall, then we're kind of right where we need to be. 271, that area, even though 271 is really low. 279, that area, even though I really don't want to go back there, that region I think it's a possibility. I need to see this on the closer up. I can't tell what's happening. Yeah, maybe about done. I had it going up to like here, but I bet they're just catching some latecomers. All right. I'm not going to mess with this anymore. I'm just going to get out. I'll take it. A little bit of a loss for me. I missed it by like a penny, but that's okay. Like I said, right now I'm just trying to exit positions in a healthy way because some of these positions are like about to expire today. I could have held out a little longer on that one maybe, but that's all right. Kind of scraping together. See, sometimes you don't want to be on the micro all the time, but like sometimes it's important to just kind of like watch it on the 1 minute when you're trying to exit a trade or something. Because you would have seen that jump right there, and then I would have waited it out and pulled the trigger if it popped higher. Because it did hop over that little flag. And there's weird little intraday gaps here, which don't bode well. There's a, this is a fair value gap right here. So fair value gap on the 1 minute may not matter that much, but if you're day trading, you want to pay attention to those. That's like where there's a gap between one candle to third candle, 1, 2, 3, and there's not a retracement there between them. So this is also a key level, so it's like double whammy. So it's very likely this comes back to 13, 17 at some point. And then potentially, again, same thing here. This is already a key level that I had marked off. They did the same exact thing. So they left these kind of fair value gaps on purpose. So these are markers that you might come back down to. And then you can look at this from that perspective, and it's pretty easy to trade it from that point because you can just do that and then watch until it breaks down if you need to stop loss it or something. Well, couldn't it just keep going up after it breaks down? Sure. But, you pay attention to things like weaknesses. If there's no weaknesses in it, then you may not have that problem. You might end up in a really good spot. And this doesn't have a lot of weakness right here. I don't really see it. There is a lower low, but it didn't come back down through this previous support at like 1328. So even there, I'd probably suggest like, hey, if you were playing something like this, that you mark off 1328, not worry so much about this. If there was an earlier weakness and it had dipped lower and then went up, I probably would be out. Like, nah, I'm done. But this could have a possible second wind to it, because this could be like an early weakness, come back up again, and then later break down. So hard to say. But anyways. All right, I don't have to watch that anymore. I'm out of that trade. This is what you're going to get from me now because I'm actively trading a lot of things. So I have to pay attention. Looks like overall my positions are pretty much way up. And I'm guessing a lot of that's because of AMC's move today. And I'm decently leveraged in it. I don't have everything in it. You might think that I have everything in it. Starbucks is actually up quite a bit. I have an 85 strike for October 10th. That's up 15% this morning. That looks pretty good. GameStop's down. Those calls are down. My Webull calls for next week are up 150% today, but they're still red because of life. They're still red because I got in too early, and they crushed all that stuff during the FOMC. My $8 strikes for AMC are up. I bought some yesterday, if you guys are wondering. What? You bought some yesterday? Yeah, I bought some yesterday. I bought some yesterday, and I bought some very late August. I really haven't bought anything else for a while. It was a long time ago, so I've been loading up over time since July. When we come down, I've been buying. So basically since like back here. Started buying up on these lows right here. That's what it looks like. Yeah. Anyways. So those are up today like a lot, but they're not gonna be like super green or anything until this thing really runs. So until that point, it's all just numbers on the page. Doesn't matter, numbers on the page. And yeah, I wanted to look at GameStop again. Yeah, so one of the things that kind of bugs me here is that we made this advancement. Not on GameStop, it's a little different because on GameStop, it's not backwards. Like we technically made the same advancement here in May going upward. If you go way back here, there was a gap that was left this time kind of near this bottom, but it's obviously a lot higher now. Or was it this one? I can't remember. Anyways, one of these two bottoms right here had left a gap in our current time frame. I think it's this one. I think it's this guy. So I was expecting we might get the gap fill locally. We didn't do that. So this is just a simple build out. One way to look at this, again, is to just kind of look at it level to level. If you're like weirdo like me and you like doing the wave stuff, One thing to do is just take a simple trend and chart it across the wave here. This is an M cross in its most simple form. So you have a similar move right now. If you noticed, we did we popped up. We actually did this twice. I think we did it on 2 different time frames. So this was like an M1, and this is what I would call like a 4 top, where there's like a repetition of pushes, 1, 2, 3, 4 in there. And I think that when you see that, that's a good sign that you're in some kind of a cross up time. And this is one that doesn't really matter too much at this point. We're looking backwards on it just to kind of as an example, but that's the model for the cross up right there. So each one of these is just a wave cross up. It's pretty straightforward. And there's back tests and all that jazz. Even this guy, which is really steep, has a little back test right there. And then it advances. So flattened out because the next creek is actually a lot flatter. It's these 2 points right on the top there. And it had to check those. So each of these is like laying up, and then you're also, of course, using common sense, hopefully, with your levels, because obviously if this is a resistance on the top, you want that to be a support when you come back down. So it looks like we had advanced to this top red line. Maybe I should change the color of these just to be clear. Well, let's make this one yellow, because that's the key one. And then that's fine. I'll make this one like blue or something. I'll do primary colors, but kind of neon variants. And then we take a look at this. You can see like it actually landed below it. Interestingly, it looked like it closed almost, not quite. It closed like slightly above the top, but it had dipped pretty low. And then it closed like slightly above that high going into that Friday. You can see that this is the 1 hour. So you can see the RSI on the 1 hour had come back down. It wasn't quite at the 50. And remember on like the 4 hour and like daily, this was already really overbought. So you might be looking at like where we are now thinking, oh, it's super overbought, like we're done for. Well, yeah, that's true. It is overbought, or it had become overbought. It may not be right this second, but it had become overbought. But like this is also on the hourly, this is like really overbought, right? And it still has this massive after hours move, which doesn't really affect the RSI on this level. I'm sure if we looked at it with extended hours, it would look different. But anyways, point being, you can see that layup. So this is a little different. I mean, we're coming at it similar. I'm like sitting here staring at this, like wondering. It looks the same, but almost part of me wonders if it's almost weaker. And I don't like that. We didn't make that back test. We didn't come back down to the gap, which is strange. And now at this point, if we filled the gap, we wouldn't be hitting those creeks. We'd have to have done that early on, and we didn't do it. So yeah, I'm not so sure now. I don't know if we want to come back down. I think that's a bad idea. I mean, we could. I wouldn't probably bat an eye at it for GameStop. I don't know about AMC. But anyways, so like take a look at this local little guy. It's pretty small. There's some similarities there in the markup. I would suggest that we definitely didn't hit this. There's just a lot of problems. I don't know. What do you say about stuff like this, you know? You mumble and grumble your way through it. I don't know. Because there's issues here, right? There's like a little intraday gap. It's really small, but it's on the hourly even. Maybe that's not intraday. Let me check. No, that's just a gap up on Monday. It just did never come back. It looks like you've got kind of a series of parallels going down now that haven't been checked. Does that matter? Well, I mean, it doesn't matter until it does, right? That's how it is in the market. It's like it could just keep going because these are things that could be checked way, 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 way later. We had talked about possibly even like next year kind of stuff, but it's always like irrelevant, right? Until it suddenly becomes relevant. So I try to keep it on the sort of in the back of my mind that like, yeah, we didn't do that. I don't know why we're doing this. You know, we didn't check these things. And the volume on GameStop is not exactly something to write home about either. It looks pretty low to me. Looks pretty low. This is a similar move. You can see like that's the same RSI height. Doesn't really matter that much, but it is the same RSI height. Maybe one way to interpret this is that instead of being kind of more on the mark and sideways, it's more vertical, like it's rising. That'd be another way to interpret this. So it's doing like this kind of thing. Instead of being below it, it's above it. That could be a sign of like an S curve, but I don't think that gets you high enough. Let's check it out. Nope. That's just enough to get you to the 29.25. We need some positive signs here. So far, this is not looking overly perfect. I thought you said it was a ripe setup, Booksy. It is, but as things progress, you want to see certain things happen. And one of the things we don't want to have happen is to get stopped below this marker here. So GameStop does not have, and I mean, maybe it won't. That's the other thing is like, this is a very different time. You know, when we look back at May, we had already broken out. So remember, like, this area that we're looking at for comparison, it's a good comparison, but like we had already left the creek. You know, this is on the outside of it. There's no if, am, or about it. It's just, it definitely was out right there. This was like a smart money buy-in opportunity, you know? It had already jumped the creek and taken off. And it's almost like more appropriate in our current time frame to think about it like it's back here, because in some ways, even though we're doing the comparison, I know, but if you think about it relative to itself, this is more, almost more accurate, like, because it's halfway up from like where the bottom breakout is. We were saying like, oh, it's kind of like halfway up to where we need to go. This is basically like the same distance to that creek. Look at the gap back here. There was a drop down, right, that it occurred. And that's the drop down that, it's funny too, because even this like backup goes back and addresses it. It passed right through it and then it backs up to address it. Yeah. So it's almost more appropriate to say that maybe we're here as opposed to here in terms of like proportion. Even though I was doing the comparison to this area because of the parallel structure, which is real, it's a different time, right? We're setting up higher and we don't have a breakout yet. This was already out. So we have a early breakout, like the very first creeks here. We do not have that big push up to that gap level, which is really what we were kind of talking about just a second ago. So I think that increases the probability that this is actually going to come back down. And before you get angry and say, well, that screws up everything, Booksy, It does not. It's better for us to do this now. Honestly, it's much better for us to do this right here than to not do it at all. I can't guarantee things ever, but if this just left, and I already kind of think it's going to come back anyways, so maybe it doesn't really matter. There's almost 0% chance it won't come back down to the 24 mark, which we already knew is like an important level anyways. But that 2360 area within the next few months even, I mean, it could be that short. But this to me is this looks kind of obvious, you know. We had this push up. It made the higher high already. It did advance on the parallels. There's no question about that. There's really no problems with it. It's just that it didn't check the levels. Like, that's not a good thing. The other thing that I'm wondering is that this little M cross right here, this had a really odd exit. And it made me curious because it did this. So before you guys are like, all right, he's going crazy again. Listen, when it broke out here, do you see how it made this higher high and then it has this really big throwback? All right. Now consider what was going on here from like what we were just talking about, like a parallel standpoint. Because I think that it's actually kind of the same concept here. We're talking about how it's like advancing and then backing up. And these are M crosses, right? So 1, 2, and then this is a 1, 2. Really going into like the 29th or maybe even a little earlier. That's how I would interpret it. So notice that this push up, that's the same parallel. I'm doing my best to make sure it's the same. Or very, 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 very close. Like it's going to be negligible on this kind of scale. Yeah, see, it advanced it right here. So it did advance that parallel structure. We're doing the same thing right now. So the yellow mark, not the blue mark, the yellow mark is an advancement right there. You see that? So from an iterative standpoint, it actually would make a lot of sense that this advanced here and then backs up to the creek and goes ahead and gets that deep retracement and fills that gap. And it may not go down that low, but it's definitely not checked this. I mean, there's no question in my mind about that. Actually, I need that one. We need to keep that one on the screen. So I don't think this is gonna go. I'm gonna hang my hat right there. I'd be surprised if it just took off, because behavior is behavior. Like you don't need to second guess it. You just need to just take it for what it is and let it be what it is. The behavior here was that it came low and it broke high, and this is where it has a change of character. And the change of character was we don't go down again. The change of character was it made a higher low. And this doesn't affect any of that right here. This would just be a higher low. It would fill the gap. It would be a back test on the creek. I think that in this case, it actually went, and this one went way back below. It may have even dropped down. Yeah, it went back below the entire. So this looked bad. I mean, and I remember saying it too in the Discord, like, well, I mean, technically it dropped through. Needs to recover, and it did. So what you're saying is we're screwed. What I'm saying is if it's just behavior patterns, then this is actually quite expected. Yeah, that's the same parallel as well. So what does that mean? Well, until it changes, and I don't think that you could use this as a really solid trend, because there's really no way to know. Because this was a change of character right here, in this case, there's no way to know. because this was a higher low, there's really no way to know if this higher low is going to be exactly proportional or if it's going to be higher. And if it drops, to how far does it drop? I mean, you could do a fib retracement and just see if that makes any sense. 1, 2, 3. I don't really want to get into like a wave analysis on that. But this is a fib retracement. The 618. Yep. The 618 is right on that. And that's the golden pocket right there. I mean, it couldn't be any clearer. And then the 786 and then the 854. So the 854 is on a fair value gap right here. So the deep retracement is the fair value gap. The 786 is probably like your creek right here. And it's also this bottom. And then you have a really obvious gap right there in that golden pocket. So these are not made up booksy ideas. This is definitely operator ingenuity, if you will. So we're clearly like the right distance away from a retracement. So what happens to AMC if this comes back down? Well, I think if it stays bullish, it could just be what we were suggesting about AMC maybe coming all the way back down to 279. Like it didn't do that check. So a lot of people get screwed on this move thinking it's going to go if it does that. And AMC has been a bit bizarre. It has made some really strange, very, very like barcoding like behavior movement at times. Yeah, so it did not hold. It definitely just rejected off of, you can see it right there, rejected off of that 294 level. But it already made the newer high right here. This is actually wildly consistent with GME because both of them after that August area, both of them go into like their final drops, but they immediately start making higher highs. Like this pushed higher than the cliff right here at 283, and then it did it again and it made the higher low right there, and then it did it again on the second top, which was at 288, which is right here. So this is like the cat ear, as I call them, right? Right here and then right here. And those are really important levels to make higher highs about. And then the most important, I guess, would be the tippy top, right? Sometimes I call that the cat paw. It just depends on where it shows up. It looks like the bongo cat paw. But those are those moves right here. So they definitely did advance it one step at a time. It's not, nothing here is particularly bad. This I don't like. I don't like that it went all the way up here and then pulls way back. So yeah, I wasn't trying to be like intentionally like bearish or anything, but there was a sense in which it's almost like it's too soon. I say it should have. I really wish it had come down. Like, I don't know. I was waiting to see if it would yesterday. It just didn't do it. So where's the back test from here? Well, it might be 287. I mean, it could hold up at 287. It's probably going to be either this guy. Yeah, it's probably this guy because they didn't check this. And then it'd have to leave again. So this may seem bad, but at the same time, like it may seem like kind of a bummer. Like I don't really want to do these deep retracements, right? At the same time, it's better for us to do this now because if you remember what happened in May, well, that resulted in us coming all the way back down to the bottom again. If you don't want to see these levels again, you need to go ahead and check these boxes, you know, as you're going out. You can't just leave them. You just can't. I don't care how many times people tell me that something won't happen or can't happen for AMC. I've heard it so many times, you know. I'm just talking about like GME coming back to 15 in a year or 2 years or whatever. And it's like, we left that level. I don't care how you look at it. We left it. And people are like, well, that's never going to happen, man. I'm like, it was just there a year ago. Like, it wasn't that long ago. Well, now it's got billions more dollars. It's never going to go down there. Yeah, maybe you're right. Maybe it won't. But the same thing was said when AMC broke out from like the 239 and it went all the way back up to 13 and it came down to like 5, and I could not tell you how many people. I could not, because it was like I can't even count it in my head now. How many people said it's never going to come back? I don't think it's going to come back below 3 again. It's never going to come back below 3 again. Blah, 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 blah. And I'm like, look, man, you left it on the table. I don't know what to tell you, but if an operator leaves liquidity like that and they don't mess with it, it's not usually a good sign. Like, it's very rare that we don't see that retracement, especially for an AMC. Like, why in the world would anybody be so, we should not be that cocky about it. When it left all-time lows in 2020 and it ran up to 70, people that were saying that it would come way back down, everybody was, probably myself included, were probably like, yeah, that's not going to happen. And then here we are, lower, right? I mean, it's like, no matter which way you slice it. And I think that that's just one of those things that, like, I don't know, man. We should not put the cart before the horse, I guess. So if they do come back and test these things and we sell down to do strength tests right now, that's a good thing. Like, we want to see those strength tests early on. Part of me had imagined that we might just gap up and go again. But then if we had done that, wouldn't we be just inviting the same repeat pattern again? And the answer is, yeah, maybe. I mean, there is such a thing as a breakaway gap, but how often is that really played out well for AMC? Well, the answer is never. It has never played out well for AMC. It never has. There is not a single breakaway gap on AMC that did not eventually come back and fill. There's not one. Not one. So you can't say that that's a good thing for this chart. So I think it's probably for the best that we're getting like really deep retracement right now. And then GameStop, as much as I don't want it to drop here, because I feel like, why would you do that? Why would you do that to yourself? It's also, it would not be surprising because of the way this is built out to see it kind of have that dip. The other thing is, even though this looks kind of crappy because it would be like a whole week of down, and you're like, well, that's dumb, Remember, it is possible because AMC and GME ran up in a matter of a few days. So once they kind of made their bottom, they ran up pretty fast. Now, from a liquidity standpoint, would there really be any other reason to come back here? I'm very doubtful about that. Like, I don't think there is a strong reason. Again, backtesting to the gap maybe makes sense. I don't even really care that much about this creek down bottom, to be honest. This is not like the most important thing in the world. Backtesting to that gap, to me, seems reasonable. This region right here, but I also think that that's kind of where we were at center liquidity. And again, we sort of hit it as a resistance and then jumped over it. There's a small back test to 24 and then it took off. It wouldn't kill us to come back again. It really wouldn't. However, timing could be pretty bad for some folks if you're thinking it's going to run up like now. And you were YOLOing calls for next week and it did come back down. That would be kind of a problem, I think, if it did do that. So, but yeah, anyways, this actually happened in 2024. So this has a big push up here. It goes to the yellow. It came all the way back down to the blue, and then it settles up, above this top. But it also was above the creek. And then if you look back at the very bottom, there's a pretty deep retracement. It's probably like 6.8 I'm just guessing. It looks like the 6.8 to me. Yeah, it's a 6.8 retracement. So there's like a 6.8 retracement right here that comes back down pretty far. And it does come back to sort of check this creek level that was coming down through here when it jumped over. And this actually dropped below on the 1 hour. It dropped all the way down to 42 on the RSI and then turned around. Yeah, it's not a big stretch of the imagination. Just looking at that and where we are currently, that might be the case. Yeah, I mean, in the grand scheme of things, this would probably be more similar regarding not the parallels, but just regarding the structure. It would be something like this, right? And having it kind of chop into here. I think maybe the biggest concern that I have about this is that we're stuck until here. And I don't particularly like that. Because now I'm staring at it thinking like, does that really throw a wrench into everything? I'm not sure. It could. If I recall, there was an October 8th intersection that seemed pretty important up high. But now that I'm thinking about it, if we ended up on 32 on October 3rd, it seems kind of like so. Now I don't want to have to like deal with this, but I guess it could be that simple. So let's think about it. Why would maybe an operator want to do that? You know, as opposed to running it up. I guess if you put it right at that value, you're on the one hand, you could be in a sense kind of guaranteeing that it's going to at least be there at that time. But on the other hand, it means that you don't have to do as much like guesswork. And I also think there's a sense in which there's no need for any particular response because you don't necessarily have to sell down or buy up because you're just right at market value. You can decide what you want to do. Because if you sell from here at 32, every time as soon as you sell, if you hit that sell button as soon as it pops out, like some people, if everybody sold all at once, I'm just saying, I'm not saying this is going to happen, but if everybody sold all at once in theory, and it's dilutive, very small, but it is dilutive, wouldn't that just dump the stock down? In which case, you've just got a giant cat ear on your hands and you're screwed. You're probably going to come all the way down to like 15. Why did they do this? Why did they do this? I feel like this is not a good thing. I'm going to have to do some math. Now, this shouldn't affect AMC, but it probably would if something like this happened. Dang it. Because if AMC comes up to this area, this is the exact same spot. And I knew that that was super, super important that they both get above here and like hold it. And if he gets above here and it sells down, like it's going to go to 1550. Yeah. I mean, I can't see a single other outcome. Like it just doesn't exist. The other outcome is that it does it like way, way later and it breaks up and goes now, but it'd have to keep going. It can't be like low. The thing is, it is dilutive. Like I know that they're giving warrants. I understand the concept of it, but it's an 11 to 1. So you're adding 1 share for every 10 shares that are owned. That's going to dilute the value. It's just common sense. There's no other way to spin that. I mean, you can spin it however you want to spin it. You could say, well, nobody's going to sell. Okay, well, that's fine, but it doesn't really matter because by itself, if the stock is worth $32 a share, right? You divide that by 10 versus dividing it by 11, right? I mean, it's just different value. So I'm going to crush some people's hopes and dreams, I think, in a minute. Now, this by itself doesn't mean that it can't run, but I wonder if we unfortunately may have just kind of sealed our fates. And now we're going to have to expect like a November move. I'm going to be pretty angry, to be honest, because I don't think it was necessary to do that. I'm not really sure I understand it. If the idea was it's going to make people want to buy more, maybe then, yeah, you get this kind of squeeze motion now and then drop after. But if there's a way to kind of hold it in place, this may seem like it's coming out of nowhere, but like I had talked about this a bit ago anyways, because I was concerned about this coming up and then dropping back down again and what that would look like. So I already had on the chart some ideas about that coming low. Obviously don't want that to happen, but I'm very concerned now. Do you believe there's a high chance that we could barcode under 3 for the rest of next? I think you mean next week. We're not barcoding right now, and all we've done is push up and made a retracement. Like, that's all there is to it. You need to hold certain levels here to show some serious strength. We've already made a pretty deep pullback. One thing that could change this outcome for AMC and GME, for example, I know that I talk about both, and some people think they're not connected and they shouldn't be connected, and some people think that they're joined at the hip, right? I think it's a bit of a sort of a middle ground between the two. There's like a squishy middle. It's like an Oreo cookie, right? On the one one hard line side, you got people that say they're not at all connected. The other hard line side, they say they're joined at the hips. AMC won't run unless GME runs, kind of thing. It's only running because of GME kind of stuff. I don't see it that way. I see them as a bit of a basket, yeah, but also that the operators are the same. So it's a behavior model, and it's a way of, yeah, manipulating, a certain, group of traders, probably retail traders who are still interested in these tickers, but that they do tend to set up very similarly. Like we're talking about it right now. We're sitting on levels that we were at back in May, and that's important, right? After making similar moves, we have higher highs on AMC and lower lows. We're marking it off right now. I'm not sitting here saying it's definitely bearish, but I will say that for a while I've talked about how we don't want to see us come above like 355 area and then slide backwards. And there were specific reasons for that, because once you get above, really it's like 325 up to 360. Once you get above these other two tops, you're over the creek. There was no way for that to not happen after about a week or so ago, you know, and maybe about the 8th of September, okay? Once you push up to those levels, now you're above that kind of macro setup. I shouldn't have to tell you, but there's a huge trend here, right? And if you push above that trend and then you distribute through it, this just turns into a humongous cat ear. The iterative motion here is very dangerous. It's extremely dangerous. If this does not break out here and it pops up high and then sells back down, it is going to go really low, like really, really low. Because when this has happened in the past, usually what you see is the, and I can show you what I mean by that, but so we're on kind of a fine edge. And look, man, I'm losing viewers as I talk because I start talking bearish. People don't want to hear it. That's your choice. You know, if you don't want to hear it, or you're just kind of like, well, it's not running, I'm not going to listen when it's not running. If he's not telling me it's going to go to 15, that's fine. But I'm telling you right now, like, if it goes the other way, which I don't want it to happen, and I obviously think that it's very possible it could just run. It's in a good spot. But if it goes the other way, I'm telling you right now, it's going to be bad. Like, it's going to be a bloody mess, you know. It's going to be really nasty, okay? So when you have like a cat ear iteration, right, and you're coming in, this whole thing should be looked at, and I hesitate to describe it like cat ear because it kind of puts people off. Cat ear is not necessarily bearish, depending on how it sets up, because sometimes it's an elevated M cross, like it's crossing up the creeks, not down the creeks. We are crossing down creeks here for the most part, which is why these parallels are so ridiculously important. As I'm trying to stress earlier, that like the idea of like a resistance and then, or excuse me, a support and then making it a resistance, that's a bearish sign. This walk down here is not bullish. Does that make sense? Like in and of itself, it is a bearish motion. You're walking down, you're not walking up. We have not walked up. It is very important to understand that. We still haven't walked up. We're barely walking up here on like a micro level. That's where this is like a bullish thing. I don't care, man. You may not like me to use bearish language. That's fine. My responsibility is ultimately to myself and like my family. And then at the end of the day, like I'm sharing information because I feel like it's good to share information until I'm not going to do that anymore. But you see how like this particular motion by itself is not, right, is not actually bullish. Like it's bearish. Now, the iterative motion of it can be bullish, and it has been bullish in the past when, and this is the important part, when you're iterating downward into like a bottom. And this is what happened in 2020. It iterated downward and had buy-ups as it's going down. And that compression down, it's like pushing that basketball underwater. If it releases and it gets above that level and you get that buy-in, it's going to fly, because each of these little marks that have been used to help suppress the price If it's bullish, then turns into buy up opportunities. You get this layered approach. Now I've got this going way off into October or something like that. Really, realistically, this should be done before the 3rd. I mean, and I'm not even saying that ironically. Like, I didn't know that the 3rd was a thing until it was a thing. But like, the big picture here on this wave is like, that's roughly where it ends, right there. Well, if it ends there, then what are we worried about? There's no way that this is the part that is not subjective, but this is the part that becomes tenuous, like where you could do all the planning in the world, but if it doesn't have the buy-in, it doesn't have the buy-in. Like, that's all there is to it. You and I don't have the power to push this over the edge, right? And so, yeah, like, this is the penultimate top, in my opinion. Like, if the wave were to continue the way that I think it should continue, meaning like it's measured out the way that it logically measures out, then this should be heading up towards this $7 mark. There's not a single doubt in my mind that that is the case, that that's where that measures out to. I've done it every which way I can possibly do it. There's liquidity levels here that haven't been messed with. This is the markup value. Everything about this screams, yes, this is correct. However, I've seen enough of this crap, and I promise you this, I have seen enough of this crap to know that anytime, and we've talked about this repeatedly, anytime you have what we call a cat ear, right? There's always a possibility it breaks down if what? If there's a distributive action at the end. And the distributive action is only usually one of two things. So like if the cat ear, and I'm making it pretty small, I should be making it bigger, but if the cat ear is, I'm trying to explain, this has always been in the back of my mind with this, so I've been like watching it, right? Like at some point it has to change character. So my hope is, and this is all I can say because it's currently doing that, all right? It currently seems to be changing character. So I'm going to say that. Right now, surface level, it looks okay. It's jumping up, making the higher lows. It's hopping over each of those little creeks that was created. Right now, it's doing okay, but it still hasn't gone above. This is kind of a bad example because this one looks like it's going, it's like this. This is really high. It still hasn't gone above that top marker yet. So currently, it's like pushing out, let's just say like this direction. It's pushing out these creeks. That's fine. All right. There's no problems with that. All right. That's just, it is a good thing. It's a bullish signal. Nothing particularly noteworthy. But typically one of two things happens here. And sometimes it can be a little bit of both, but it could be either or. I mean, it doesn't have to be both. Usually what I fear the most when we get to these cat ears is that you get to the end and there's an up thrust that goes above the main ear. But the other alternative, which we have seen, for example, November 2021 going into 2022, that area has no massive push-up. There's no super high like cat ear push. I've seen this more often on like a local time frame where there's like a big upthrust at the end. It's a UT or UTAD. If there's been weakness in the middle, this often happens. And what it usually looks like is like, some people call it like a really sharp, almost like devil horns or something, right? Where it's like, or bat ears, like the bat ears, not the cat ears, right? Where it's like this really nasty, there's a really obvious like weakness in here, and then it has this really nasty like pump up at the end, okay? That does happen, but it doesn't have to happen. And one of the other things is it could just do it over the creek. This is more common, and I feel like we've seen this more often where it's like a smaller move. So an example of that nasty move was this guy, the Judge Zern guy. I feel like his legacy in my brain is always going to be associated with a negative chart action. this is an example of one. It's almost perfect. And in this case, I don't really see much of a weakness, which is kind of the scary part. So do you see how like there's distinct similarities? Do you see the problem? You guys are like, uh-oh. Yeah, it looks pretty similar, Booksy. Yeah, it does because it is. I'm not saying this is going to happen, but this is where you get a problem, right? You get this massive push-up. It comes above the previous top. It actually went really high here. It goes up really, really far in extended hours, right? But it goes above the previous top and above like the dominant creek, right, as we would have seen it. And that's a distributive action. And then it slides back underneath. Okay, the same thing happens here, but to a much lesser degree. There's a very, very, very tiny push of resistance at the end, but it's there. There's a couple of them, but it's there. Really, really small, and it ultimately doesn't even have any real strength at all. This is fundamentally like no different, right? It just isn't. It may seem like it's different, but it's really not. If you look at what's going on here, it's the same thing. You're pushing up and you're failing and you're no longer holding on. And ultimately, this is essentially like an identical mock-up. And I've used this example before. I don't really love it because taking a micro to a macro feels kind of silly. But the principle behind it is the same. So I think it's appropriate to use a bars pattern in this case. I don't normally like doing that because it gives the wrong idea that like you can just copy paste stuff and it just works. Because that's not true, because you don't know the outcome before you get there and before you see the setup. This could have set up very differently, right? And then also you'll notice like some of these levels are just not the same. But this motion right here, early on, early weakness, right? And then a secondary distributive action. This one obviously on the smaller scale goes up way higher. This one does not breach the creek. But the rest of this fundamentally ends up being the exact same concept. And I'm not going to go into like, again, gory details on it, but the concepts here are essentially identical. And which is that repetition of iteration, right? And this ultimately becomes, in and of itself, like an iterative pattern. And that's the crazy thing about the cat ears, that I think this is what changed a lot of my perception on what it is that we're actually talking about. Because when you take a fractal, which in and of itself is self-explanatory, people think it's like a bars pattern. They think it's a stagnant thing. And it's not. And when I learned that it was kind of, well, exactly what it sounds like, a fractal is made up of its parts, right? What that means to me, when I talk about shrinking iterations, like this is what I'm talking about. This is the same exact thing, fundamentally, right? And yeah, you can like adjust it to make it look like whatever, but it's still a 1, 2, 3, 4, and then this is a 1, 2, 3, 4, and then this is a 1, 2, 3, 4, because it's shrinking. And the shrinking is not a fancy like, oh, this is some fancy like booksy thing where he just like talks about, and obviously this is going to look the same because I'm just shrinking it down over and over again. But like, because I mean, it's the same thing I just did, right? But like, obviously, like this is going to continue to shrink. We could use this pattern and then the next pattern and the next pattern. It doesn't matter which one you pull out. So the problem is not that that's an occurrence in the market and that it's somehow, you know, oh, we got to be able to read it in order to get it right and all this stuff. It's really more of a function of the market as opposed, and it's just like kind of the reasonable outcome, as opposed to like some pre-programmed algorithm that's supposed to give you like a cue or an insight. If you think about things as a repetition of behavior, it makes perfect sense. If the behavior is we wanted to distribute, then you're going to see that on the macro level. You're going to see that on a micro level, on the big picture and the small picture, right? But you're also going to see it as you exhaust the range. So as you progress through a range, you're going to see a similar function play out, repeating like itself until what? Like volume is exhausted, which is always what happens. So it takes longer and longer maybe, and it seems really boring, and usually that does happen, right? Distribution's a little weird because you'll have sudden spikes of selling and all this other stuff. There's more to it than just, I'll copy paste and it works, right? There's other things. Just like accumulation looks different, it has other things. And I've made the point that that motion right there, which is a shrinking distributive action, which again, this is shrinking during the range, that's no different than the shrinking that occurs here. It's just for a different goal. So there is a shrinking that occurs here, and that's the repetition of this pattern, which is played out over and over and over again. So before you think this is just, again, some kind of a bearish signpost, it's not. It's also a something that happens repeatedly in a bullish signpost as well, right? Now this one is harder, maybe a little harder to kind of like read it, but fundamentally it's the same exact thing, like a repetition of up thrust, a final, UT kind of motion at the end, but it's a buy up opportunity, right, with the backup. And then this is the same thing down bottom as well. I did this like a long time ago, this exact same idea. And what you're waiting for is you're waiting for the change of character to happen to the downside. Just like on a distribution, you're waiting for the change of character to happen, but basically it's the opposite, right? It's going to the upside, not to the downside. So the way I think about it in my head is that usually if we see repetition going up, not always, but if we see repetition going up, I would say most of the time that's bearish. If we see repetition going down, most of the time that's bullish. And one of the places that I first saw that was here. We saw repetition going up here, and then it dropped. But then we also saw repetition going down here, and then it popped. Okay? So it's a good rule of thumb to keep in mind if you happen to have a good eye for those things. But in the case of a distribution, probably easier to look at it as just a, hey, how do I know what's what? Well, again, if the repetition is downward, right? Nobody could argue here, and I don't think anyone could argue here, that this is not downward repetition. This is clearly doing the same thing to a downward scale. What we're not saying is that, so let me hide everything real quick. I'll show you what I mean. What we're not saying is that there's no downward repetition here, right? You can see that this motion right here and this motion right here are virtually identical in some ways, right? But that should also give you pause, because if you remember, what happened back here was that we started getting those early markup motions. It looked bullish because we had those higher highs and higher lows, but we started getting like some crazy chop, right? And then it pushes up really high, and then it ultimately dropped. If you recall, we saw here, I said that this looked like it could be a potential spring opportunity. I'm talking about October 2024. This could be a potential spring opportunity if it holds the supports, and it did, right? And then it even, Stockfather, who's like a Wyckofian person, even said, well, there's a change of character because it held and it's going up. Yeah, that did happen. But what happened is then it pushes up high, it comes above that previous top, right, region, comes up really high, and then it sells back through. It's the same exact idea that we're talking about when we look at any of these distributions like this one, right? Where it's like, oh, it's making the jumps, and then it looks like it's going to go, but then it comes back through. So in our current time frame, if we were to just kind of boil it down to that concept by itself, this is my concern, because GameStop right now is doing something that's got me a little bit nervous. I hope that I'm just kind of talking and it's not going to happen this way, right? But what we don't want we don't want this to be like just another iteration, right? I get that this has happened. That's done. But what we don't want is that this motion right here, and for lack of a better way of describing it, this motion right here to basically end fundamentally the same way. Okay, you don't want that. So what I've been saying for a little while is that I'm really concerned about a final kind of a push down here. It's not actually over, and there's like a head fake motion that tries to get us to buy in when it's really not ready yet. There's no doubt in my mind this is like hyper compressed. There's no doubt in my mind it's crossing up. Like, it is happening. You can see it right there. But the same thing happened back here, and then it makes an early drop. Remember that? Makes an early drop right here. It comes back. It hits the same level. This is like a fool me once kind of thing, right? Well, they've done this a lot, so it clearly works, right? So this is a similar motion. This is not that different from what occurred in the, I'm not saying it's going to be the same. You guys are probably like, well, yeah, but you were saying the other day that it looked bullish because this. Yeah, well, there's a similarity to it, but that's the nature of it, right? It's like, it's going to look kind of similar. It just is. This is very similar to what we see here, where we had that, that cross up. So right there, ultimately, if I can get it to draw, I didn't want to draw it right here. I'm not going to extend that line. So how do we know that the character's changed? Well, first of all, you can't know the future. So you can look at what's already there and you can say, well, this is different and this is different, right? But we ultimately don't know the future. So you can't sit here and say that I know this is different because X, Y, Z. I could tell you that I do think what I've already thought, which is like the wave pretty much looks like it's done in October. There's a 2-year cycle here that's done at that time. It really is already done. You know what I mean? I'm already kind of like a little bit antsy because we've already passed the window. You know, we're past the 11th. I mean, how far is it going to go? Right? Returning back to October 3rd would be 783 right there. That's October 3rd for AMC. Kind of crazy, right? Yeah, a little bit. It's crazy that if it were to return to the same spot, potentially, that's one possibility, and that's the 783 mark. That's pretty much the exact same thing we just drew a few minutes ago. If you go back and you look at 783 on October 3rd, that's almost the exact same setup. The issue isn't that it doesn't look nice. Of course it looks nice. I think it's a possibility. I think that the bulls have already, like the operators already created this possibility. I don't necessarily think that means they have to take that possibility. This is where we get to this discussion of, is it inevitable or is it flexible? Could the operator choose to do something different in this instance and not take it up? Well, that'd be a good catalyst, right? That'd be a good catalyst. Possible Taylor Swift movie release on October 3rd with her new album. Yeah. I can't even remember how I drew it now. I have to go back and look. There was a reason that I did it where I did it. Now it looks like October 29th, but I'm like, okay, so was I just wrong? Or is like November 6th or something? Is it really like farther out here? I don't know. Guys are like, thanks, Booksy. Giving us bad charts. Yeah, I think the reason that I did that was because the but that doesn't seem right. It had more to do with that bottom and where that cross is than it does where the lines are. I trust the cross down more than I trust the pieces, but it still looks like it's way out there. But then again, this is also looking at October 3rd, not November 4th. So the other thing about this is like that's a higher target. So I mean, like if you took that and you went to like the $6 mark, that's going to bring it forward, right? You can see that. So that also is probably a big part of what I was doing is like, where is it actually measuring from? That would explain that discrepancy there. Yeah. So it looks like I did it a couple different ways. All right. I just wanted to clear that out. Yeah, right there. That $4 is like the middle. So anywho, so this has happened before, right? Where it had this like early advancement and it looked like it was really good and then it slid back down. And the resulting action from that typically is like a directional move that depends more on, I guess, the overall setup. I don't really want to get into like every little thing here because this is kind of complex because it depends on which top you measure from, so on and so forth. But the overall direction is usually determined by this drop right here. Essentially, this direction helps determine where this is going to go. So naturally, like my concern would be that, well, if we do drop, it's going to be pretty nasty. You know, I don't think it's necessarily going to be as bad as, it's hard to say, bad as it could be, but anyways, so you get my point. So if this were to come above the top here, but not advance, that is definitely one of my biggest concerns. Definitely one of my biggest concerns. So I think that, I can't remember, I think this might be the one that actually advanced it anyways. So you do not want to see this do some kind of like janky mess over the next few days. And that's what I'm wondering about that 279 level. It really bugs me. Because it would be like a lower low. And then if it came up again, it might look fine. But if in October 3rd we're like sitting up here, I don't know, man. And the thing is that if you take this one step further, yeah, I wonder. So if it hits that like 279 and then it pops, well, let's just hope that doesn't happen. You guys are like, that's not very helpful. Yeah, so this is effectively the same thing. And if you look at it as a giant cat ear, I think you can see what I mean. Like, right there. It cannot reject here. So this is what I don't want to have happen, okay? So if we're trying to prepare ourselves for like, what's the worst case scenario here? This is probably it. I don't know if I could do a worst case scenario than this, to be fair. There might be some, but this one is the most devious because it would look really bullish, but it would never quite get above this region. I'm guessing it would just kind of look like a full-on breakout. We probably even have like a huge influx here, big push up, FOMO, but then it would be gone. If they rug pulled it and GME is not up beforehand. So our best bet is to, I don't want to say like a wish and a prayer kind of thing, but our best bet is to look for that push up before then. We need to see it advance early. If it goes down, that's okay, but it can't linger there. Like, we really don't want to see it drop down and then like linger there for like a week. I don't know if I could make it work if it's that late. I mean, and I'm just saying, like, the chart doesn't really allow it because it's just not logical at that point. This motion right here, it's already kind of happened that way. So I'm showing you that the problem with that, right, is like if it comes all the way back because it, for whatever reason, didn't hit that mark and it comes all the way back to 279 now, I think it's a signal that this may not be as strong as it looks. And then this is the wave that has to cross up and over. It kind of makes sense because they established this trend and broke it here on the 18th. It's not all lost, okay? I'm just exploring like a possibility here, and it's not a pleasant possibility, you know, but I'm not saying it's gone yet. That's not true. What I am saying is that you got to be like smart. You got to be smarter than the average bear. Hey, boo-boo. Some of you guys are like, what? What is that? That was weird. I know. Some of y'all don't even know Yogi Bear exists. It wasn't exactly the best television, but it was really kind of crappy, limited animation. But the nostalgia is there, I guess. Yeah, so this is a problematic. Yeah, this is kind of a problematic thing for us. I'm not convinced it would go way down here necessarily, as opposed to just making a an actual spring into like November. But it's the timing is the same. This is like November going into like and that's a really huge sell down. I get that. But this would be like going down into early November around the 4th. And this would also be probably heading down till about the 4th. So like worst case, this could be like this. I don't know. I looked at that 226 a while ago, and I didn't pay much attention to it. I felt like it could be a thing, but we'd also seen like 180. There's really no telling how low this is, just based on this lone like curve. We had other signals that were saying like maybe one as low as 180 or 2 or something like that. I would suggest it's probable that this is like what we call like a shallow S curve or an S curve. And so previously I had looked at the top here as a possible S curve. And I found that I think it was like 180 was definitely one of the ones, like right there. You can see 192. So that's a possibility. And then up to about maybe here. These are really low numbers, I get it, but they're reasonable, up to like 212. And long term, I think they had a lot more to do with certain other creeks. Like there was one back here that I thought was kind of curious. So like, all right, so let me say this. In light of like the previous iteration, right? Like, did this come back below the bottom? Well, the answer is no, it did not. If this were a distribution, you would have it pump up here and then it would sell down below the floor, like the bigger picture. But the floor here, from a Wyckoffean standpoint, would be 245. Like that'd be the phase B bottom. And this would be like a reaction off that bottom. So you've established like a new floor. It's actually slightly higher than the previous. The same thing happened in 2020. There was a bottom there. You're like, why are you even thinking this is going to run then? This all looks kind of bad. Well, I guess what we're saying is that to some degree, and I get really irritated by this because I'm kind of sick and tired. You know, you already know this. I'm kind of like tired of AMC, and I'm really getting annoyed with like constant. It doesn't matter. It doesn't matter. That's just me. I'm just getting annoyed with like the constant bearishness of everybody and like how everybody's like, well, that's never going to happen. I'm like, well, I don't know, you know, but this is a similar kind of a setup in which the two previous bottoms were close together, but they made a higher low here. So it wasn't like, this isn't super unique, right? And then ultimately, if you look at where the retest is, it's not on this floor. It's not the first bottom. It's not 239. It's actually the second bottom, which I think more appropriately would be your phase B bottom. And that's right here. At this point, that's not neither here nor there. That's 245. So it's impossible to really say that it definitely goes down to like 190s or something like that. Well, that's silly because we could do those measurements all day and all night and make suggestions that that's definitely where it's going to be. There's always ways to find evidence for those claims. In reality, it doesn't have to go any lower than, I mean, it could be very simply like 237. And I said this before, like, I'm not really sure which one of these is going to be used. Right now, the 279 floor was used. The 279 floor holds up, it's being used. Like, that could be it. This could be your strength test right here, and then it's going to take off and go. But it's always a possibility, you know, if it didn't hold, that you have to then go backwards to the next one. The next layer is really the biggest layer, in my opinion, and it's the only other one left. And I don't see another one. I mean, so I could see it going to like 237 and then holding at 246 and like taking off. Again, in November, there's a earnings call probably around that time. So I think it's right around there for AMC. So that's certainly a possibility. None of this is new. I had this on the chart here. I thought it might do something like that and come down. And it hasn't done that. It looks like it's trying to leave. Yeah, I mean, there's a lot of numbers here. I don't really want to... I could list out the ones if you guys just want to hear them. The ones that have made the most sense to me are 237, the 188, 190 area. I would group those together. 226 has come up a lot. And then on rare occasions, 150s. And I say rare occasions because I have found evidence for it, but I don't find it to be the most convincing one. Maybe that means that's the one it's going to be, right? I don't know. But it's just not the one that comes up the most. So 180s, 190s has probably come up the most. And it's been coming up for a long time. So yeah, this would be another way to look at this. So we were talking about that October 3rd area right here. So another way to look at this would be that October 3rd is not really about that I'm wrong, essentially, that I was wrong that it should have been here, which I don't know how I could have done that or known that, right? Like, there's just no way for me to have really known. But no, it wasn't that it was turning around and heading up on the 11th or the 8th, you know, going into this time period right here, this window. You can see this window is where I thought we might head up towards the creek, okay? And I'd specifically said from August 25th, because I think that's where this cycle begins, where you enter into that range, down to about September 11th. Looking at it now, I would even put it slightly beyond there, but not much. But like this area right here, this is what I was saying, like that's probably going to be the entry window. But let's say your operator decided that because of this October 3rd date, that's going to be a better time, and they've still got some time and liquid on their hands, and they're not rotated out of their positions yet. We got the rate cut. September 16th seemed like the right time, but they announced this thing that's going to happen on October 3rd. We can delay it a few weeks. It's not going to kill us because we don't care, because we're operators. We don't have all our money in options. We're mostly just shares, so they don't really care. Like, it doesn't matter how long it takes to them. And the difference of a week in an operator time frame is so minuscule. It's like a blink of an eye, right? Because they trade over the course of, if it's a long operator, they're trading over the course of 2 to 3 years. So a week is like nothing. A month is basically nothing. But you go back to Monday, October 2nd, and it looks like Monday and Tuesday are basically the same place. It's the 787 mark. It's a weird number. Maybe 785. Yeah. So right there. And actually that looks kind of right, because it looks like it went up and tested the top here too. That's the same time right there. Yeah, so it tested this little intro ledge. That makes sense to me. Yeah, so I mean, you could do it like that and then take the same parallel and essentially just, yep, right there. There it is. What do you mean there it is? Well, see that little this is that Tuesday the 2nd. How could they have possibly known that? I don't know. I have no idea. This is how the excuse my language. I always think I'm like how the heck, how the actual heck, how the cuss could they have possibly known that October 3rd was the date? But that is where it jumps the creek. I'm like, how could you have possibly known that 2 years in advance? That doesn't even make sense to me. Like, how? I don't know. But maybe I would have said that with anything. Maybe I'm too easily convinced that there's some kind of magic to it. I just find that to be bizarre as all get out. That to me is like, what? This is why it makes you think that there's like collusion between parties, because you're like, how? There's no way. There's no way you could have known that on October 3rd that all this stuff was going to happen 2 years in advance. Like, unless somebody told you it was going to happen. You just telling me like people are that good at predicting the future? I don't know if I buy that. That's just whatever. All right, so let's say, for example, I hate it. I hate it so much. There is another one, which again was here. That's closer to like where I would have thought. That's on the 13th into the 14th. That's a little more like familiar to me, because I'm like, okay, you could have seen an FOMC date coming. Like that, you can see that years in advance, right? But I mean, you can't see random. I can't understand how anybody could see an October 3rd date coming from that far away. All right, whatever. Okay, so let's say, for example, moving on, that it returns back to that area. I mean, it's pretty convincing. It's already kind of chugged along here. Yeah, and you could use this as a not like a test, but you could use this as an argument for maybe where that spring ends up. That if it ends up really low, that's like 170s. It'd have to be going down already though. So hold on, let me see if that's the argument, right? Well, you just said it was gonna be up there. I don't know where it's gonna be. If GME goes up to 32, let's say it didn't go any farther, it just stopped at 32. And AMC is probably at like 320. It doesn't run. It make you think it's going to run because it does the same thing it did here where it like pops and then it sits underneath 320, which is the same place that this popped last time. So you think, oh, it's going to run up right there. But it doesn't run up because they're actually screwing you over. They want you to think it's going to go, but something here is off and it doesn't go. The alternative, I suppose, would be to look at where this is, and that's the 185 to 199, which is the same region that we had talked about previously, just a minute ago. I was saying like 180, 190 kind of area. And I think that makes sense, probably where that comes from. And there's reasonable evidence for that too. I think if you look at this, and you look at the creek crosses that were made here, I want to say, like way over here, that actually works pretty well. There's another one that's even lower, but I think we already missed that one. It's like way over here. Yeah, that would have been like selling down like immediately. This is the next one. So you see how I think an operator could probably like fudge his way through it. And either of these would be fine because they would approach the same levels that you were at previously. You don't have to necessarily drop below it. It could be right on top of it. So yeah, this is definitely not out of the wheelhouse of possibility. Yeah, that freaked me out though. I don't know about that. But they added November contracts. Yeah, so this seems reasonable. I don't really know how else to measure this. I think that's kind of all there is to it. I'm very doubtful this could just drop like that. And it's not like AMC is diluting anything. This kind of move happens sometimes. I was like trading Oracle a lot, and look at that sideways. I'm glad I got out of that this morning. I was trading Oracle a lot, and this kind of crap does happen. I mean, you can see these massive just dumps when it's trying to go into distribution. But these are neither here nor there, really. I mean, I don't feel like it's the same situation on AMC necessarily. But I suppose all it would take is a big rug pull beneath like that. Beneath that 22 area on GME. And then that similar like 270 region on AMC. Like that probably give you a really fast drawdown. So the trick here is going to be watching if there's an extension. See, this is what I wondered about earlier because I talked about the danger zone as being above this one, not above this one. I think either one is possible, but now I'm like looking at it, I kind of think that it may even be reasonable to suggest that it goes really high. It does hit like 363 or something like that, but then comes back down because that would give you a more appropriate whip around here. And I don't believe that everything in the market has to be 50-50, but it so often is. It's almost unavoidable. Like, I don't know how to explain that other than just to say anytime there's like an up thrust, I'm almost always drawing that line because it creates a key support regardless if it gets there or not, you know. It would be a potential key support. So I'm glad I closed my truck window. Well, all my contracts for AMC are December. So like I'm way out there. I kind of felt like there could be shenanigans, and if there's shenanigans, I don't want to be stuck in contracts. We're on Friday, the September 19th, right? We have had some push-ups. We have not had anything that looks terribly unhealthy. Does it have to have a spring is really the answer that is really the question that we're asking. Does it have to have a spring? Can a cat ear just break out? Can it not just go, right? I think when you get down to it, it's going to be about, like, the interpretation of things is going to be about your ability to look at volume and make a determination. So, like, I'm okay at it. Even after multiple years of staring at this chart, I still don't feel like I'm always going to get it right. I don't usually trade that way. I stopped doing that a while back. I've been trading on the basis of like wave analysis and just simple basic arithmetic, and also like finding bottoms and things like that. Like knowing, like right here, we talked about this a minute ago. This is not my mind reading. This is just me looking at the chart saying, yeah, there was 2 markers left open. One is right here and one is right here. They're critical markers. They didn't, for whatever reason, they just kind of skipped over them. They didn't back up enough. So you mark them off. You know that that's probably going to be key levels. They still haven't gone down to this 13 level yet. And now look at the EMA. It's like creeping up here on the 1 minute to that same mark. Is that a coincidence? No, I think it's just basic math. And then knowing that, like, I had a target up here that was really high, and you're like, oh, it's going to hit this target, right? At like 1346, but it only gets to 1341. That's just knowing that an operator is skeevy like that. You know, like, I don't count on every single move hitting my target perfectly. A lot of times they miss it on purpose because they know they can sell, you know, option contracts to people, and they know they can do things like whatever, I mean, you name it. You know, bears have just as much influence as bulls in some cases when it comes to like stopping, right? The price movement, of course. So like, just like a bull might not go down all the way to a low target, a bear might not go up all the way. But I've not been really trading based on like Wyckoffie principles of, not that often. Every now and then, if I see something that's like an obvious setup, but I've not really been doing that based on like volume and things like that. So I'm trying to tell you that, like, I don't feel like I'm an expert at that, and I don't claim to be an expert at that. And I also think it's not appropriate to kind of do that prediction for you if I'm not an expert at that. So what I can do, though, is I can say that I know that this is a critical level. I know that this is a critical level. I know that the walkout is happening at a good even pace, but that it's not done yet. And it kind of left like right where we started, which is a bummer. But it's also important to note that, like, you have to just take the chart as it is. If this holds up, there's no reason to think this is going to happen. The pessimist in us will always look at stuff like this and suggest, and I'm going to do it like every time, right? I do it every single time the stock moves the right way. Every time it pushes up, I'm like, could this happen, right? Because I have to be, in my brain, like, I need to be aware of, like, what does it look like if it turns bearish? And why would you, I guess, I don't know. For me, I'm like, why should I ever trade otherwise, right? Like, I should always, if it's going in a bullish direction, I need to always be thinking about, what does this look like when it turns bearish? Not, does it keep going up? You know, can I just keep riding it up? Because then I'm just guessing at when I need to get out, and that's kind of not what I want to do, right? So like I got out of my Weeble stuff right here. I missed the little extra. I don't really care. It probably got crushed anyways. Was this a good exit for me? Probably. You know what I mean? Like there's not, you can look back and say, well, I could have done this, I could have done that, I could have held it. Yeah, maybe. Or you could just get out and buy back in, you know, when it's appropriate. And that's why I'm always looking at like the contrarian side of things. So I am looking at this as a contrarian, and I think this is the contrary side of things right here. This kind of emotion going into the third, if we are at like 319 on the third, I think it's going to be a really, really difficult call. I do. You know, if it's closing continually above this creek, that could be a positive sign. I think it would be far more negative if this again slides back down and like comes up one more time. That would look more bearish to me if it just doesn't hold up. This doesn't look that bad the way I drew it out the first time. If it held up here, it might be fine. Especially if it lands like down on top of 320. I think you could have a big squeeze moment. What would be even better would be to avoid that altogether. Not have it go bearish, right? And we already know, because we've been doing it, we know that the outlook for the bearish is definitely possible, but it's not, at least right now, it's not what's happening, right? What brought this about today was me looking at this, thinking about if this went down again because they left it open, like, and it just didn't run. Either it runs from here or it doesn't, right? And if it doesn't run from here, I don't think it's just going to go sideways for 2 weeks. Okay? I think if it doesn't run from here, it probably drops from here, and it does something similar to what we saw here, where it backs up and goes back to try to fill that gap. And that's reasonable. I don't think it's unreasonable. It makes sense. It could even go down as low as some of these other retracements, which I marked off on the chart, that 23, maybe even 2290. All of that would be pretty darn low. I kind of favor that 23 though. I don't think that'd be that bad. I think that one would be pretty solid. But sure, that would make sense if it's going to go down again. That would be the logical backup. I even got so far as to say that might even be the most probable situation here. However, just like we looked at May 2024 and we saw that it had that cross up, there's not really any reason to doubt it if it has the cross up now. If it doesn't, then yeah, doubt it, right? But if it has a cross up now, like, okay, so then it's going to go, right? Well, yeah, potentially. That's the way I would read it. I wouldn't necessarily interpret it any other way, just because. So the cross up now would be us on GME seeing it move probably pretty far. It'd have to come up above the top here, which is 2644. And then it'd back up, probably hit right about where we are now, 2621, and then end the day above 2644. That would be a bullish cross up going into next week. So if you saw something like this on GameStop, again, higher is fine, but really you want to get to that top. And there's like only two little peaks here. One's at let's see here. One's at 2642 and the other is 2646. So those two little peaks would be ideal to close above today. If it makes this push and then backs up. Again, creek backups, they're fine. I actually think they're better. It's better to do it now. I've always said that, and I feel like that's very true. Get it over with, you know. Let it be done on the day of, intraday, and then let the daily candle close like higher up. So having a push up here, it doesn't need to go that high. I don't know why I have it going that high. It doesn't need to be that high. Having a push up here with a backup and then kind of ending the day, consolidating. This could be a pretty good setup for Monday. I wouldn't be too disappointed with that. It's little bitty things like this that are nuanced. I'd have to see what happened, you know. Maybe it does go all in one day. Like I don't have a one size fits all for this. Like it could be a situation where it gaps up after hours and Monday we're way up high, right? But we want to see this kind of advance, hold these levels, and then go again into Monday, into Tuesday. It doesn't really matter, right? This is like the simplest simplest bull setup right there. Okay, that's the easy one. That's just a M cross 1, 2, and then it goes again, and probably at that point goes pretty far after it does that. Why are you so confused by these October dates, Booksy? Part of the reason why I find it to be perplexing is because if you recall, when we were looking at the wave forming for GME, I used some weird stuff, but I was looking at specifically how the operator had been measuring out these waves. And there's a little upthrust right here in the middle. And there's a second one right here. But these are often like wave measurements that indicate. It's weird because like looking at it now, I'm like, yeah, this is essentially the exact same thing we see on AMC. You know, we were talking about this a minute ago. They're so similar. It's meant, in some ways, I think it's meant to look like a distribution that could turn into some kind of a bullish move because it keeps everybody on their toes. It's really identical to this. I mean, in some ways, I don't like to, again, do the bars pattern thing too much because I think it's a bit silly at times. But it is very, very similar. I think it's a good thing that, I mean, that's really similar. That's like super similar. I think it's a good thing that the market, gosh, that makes me kind of sick to my stomach. It's so similar. Sorry. It's a good thing that we were down low, I guess what I'm trying to say. I feel like it's better to be low here than to be up high because if we were up high, like pushing these tops, I'd be more concerned, obviously, that it's going to dump if we were just constantly like up thrusting through here. I like the idea of this coming down and being really boring for a while. That seems a lot more bullish to me. You're like, what if we're just doing this? Well, that's not true because it broke out of that pretty early and it just kept iterating. So it still looks more bullish than this did. This looks kind of crappy. But yeah, isn't that fascinating? Anyways, so when you look at the motion there, the timing of these kind of wave formations tends to be pretty similar. And there's these markers in the middle on these little like back tests. And I think what they are is kind of exactly what you probably would imagine, which is that they're the main wave cross down. It almost looks like the exact same thing until you get to here, right? And then it looks really different. We still don't want to see this kind of like break up and crap out here. Maybe it's just like a last minute crap out. But I think it's actually quite straightforward. I think this is, that wave that you're looking at, this is really the cross down here. And I look at this as, again, so this region, I look at this as like a halfway point. So what kind of weirded me out was that this was like a halfway point right here in February, this region, and it goes from like February 11th through maybe the 20th. It's a small window of possibility, and I think I actually picked like Valentine's Day, the 14th. There's this tiny little upthrust. I thought that's probably like the more likely spot. That's kind of this guy right there. And I was like, yeah, it's probably the more likely spot that you see as a middle, you know, in terms of the wave. So when I did that, I was like, yeah, it looks like it's poised to hit on October 3rd or thereabouts, or October 6th or something like that. So that's, sorry, this is like weirding me out how sometimes it's like, yeah, I don't really use fractals that much anymore, but not bars patterns, I should say. But it does freak me out how similar sometimes they are. There's some really key differences, and especially here where this like goes low and then actually makes a higher high, and this didn't do that. Consolidated very differently in that regard. But I wouldn't be surprised again if it still had a problem, because remember, this is where it returns to ultimately when it comes back up and sells off, which would be like us going back up to 32 to 36. So we still want to see the same thing. It's not really a different in that regard. But anyways, so I had done this analysis on GME a little while ago, and I thought it looked like October 6th. And then they announced this thing that's going to happen on October 3rd. And I'm like, thanks, you know. I guess we needed a catalyst, but it's weird. Again, how would you possibly know? I don't get it. And it goes back to another set of parallels, which I don't think are on this chart. I actually think they're a little different. And that had more to do with this breakdown and this motion right here. And then going back to the first one. If you look right there, that's October 3rd. I have it marked off. And October 3rd for us is right at, so crazy. On this parallel structure, just like on AMC, it really is similar. If you use this parallel structure, October 3rd is $30.80. And then and then even make matters even crazier is then if you use like the literal October 3rd, which is a pretty big range, it's down here at 16. Strange, isn't it? Wait a minute. They're inverted, Booksy. Yeah, I know. I don't know why they're inverted, but they are. What do you mean by they're inverted? Like, we did the same thing on AMC, but because AMC is trending down, if it goes to its parallel, it's lower. And if it goes to its horizontal level, it's actually higher. They're like inverted in some ways. Both could go up, but it's weird to think that like if GME goes up and it hits the October 3rd parallel, it may only be at like $32. Whereas if AMC goes up and it hits the October 3rd horizontal, it's going to be at $7. It's pretty significantly different. Then again, you know, AMC is not about to have a split. So it's not a huge split, but it's a split nonetheless. And it is a little dilutive, so isn't that weird though? So like they're almost the complete opposite. And actually, I'm sorry, I said that wrong. I said if it goes up on October 3rd. Really, if it goes up on October 3rd, this hits like $8. That's the October 3rd area. I'm not so sure if it hits 8 or 7. I don't really care. Anyway, if it went up there, I'd be in good shape. So, but it's weird, right? Because then like you think about the other way and you're like, well, if it goes down to the parallels are down for AMC. They're up for GME. So it's flip-flopped. Pretty crazy. It's structural, but it's crazy nonetheless. Yeah, this matches parallels, but it also does not. And then this is April on April 23rd on parallels. And that's very different from us because like we're already there, basically like right on the 23rd right here. So at 3:23, yeah. What are you saying, Books? You're just saying a bunch of dates and numbers. Just thinking. Like I still don't really have a lot of doubts in my mind that this may indeed be correct. And I don't also think that this means that it could not possibly go higher. Like there's certainly a possibility that this could go higher, but there's no doubt in my mind like this is a possibility, but that doesn't mean it has to happen, you know. And so I just kind of keeping myself light on my feet with my thinking. This is a melt up, right? You might think this looks bonkers, but this actually happened as well. The same wave happened in 2020. So 2021 has one of these. But in 2021, what it happened is that it went down. It did like this. It went down low, and then it pops up, and it came back on top of it like this. That's what happened in 2020. If you look at the timing of the wave anyways, that would be comparable. So the other wave that we looked at on GME, that was a bit different because I used a different set of parallels. So these parallels I'm using right now are great. I feel like they're really useful, but they're not the ones that I actually used when I first did the measures. Those were different. I used a different set. You're like, great. Yeah, but it matters because they're not the same. So it'd be disingenuous to say like, well, this is exactly what I said before. It's not quite. There's a larger set of, let's see if I can find it again. This is the larger wave here. This is a little different. This is about the local, like if this were the most extreme it could be, this is where it would go because 46. You probably like these numbers a lot better. But the main reason for that is that this coincides with the other set of parallels that I have, which have to do with this angle here and where it returns to at that particular place in time. And this goes all the way back to the beginning. It's just a different set. And so this wave is a different one. It basically has the same cross down, like that February 4th or whatever area. But then when you look at it from like a helicopter standpoint, I don't think I've even tried to draw this yet, but I will. It should be like this. And I knew this was going to be an issue. The issue with this is that there won't be very much interaction with it. I think that's okay because if you notice, like, while this does follow it really neatly at first, it does break down from it and then it returns back to it. And this actually makes sense. A long time ago, I did a chart analysis that was, and it actually looks like the M cross here, which is kind of fascinating. But I did a chart analysis that was about sine waves only. And I looked at how there were sine waves that when they mark up, they overlap other sine waves, which is really bizarre. I don't know if it's a good way to trade, so I just kind of left it alone. And I haven't really touched it in a long time. But what I found was that there was, like a long time, it was probably like a year or 2 years ago, maybe more, maybe like almost 3. But what I found was that this kind of setup, when it goes, it finds like a higher level wave. And so there's almost always like a cross here that it does break down, but there's like a secondary motion here. And if it were to hold, it would follow the next wave up. And when I went back and looked at AMC actually had, I think it was at the time like 100% each for each wave. I did like 100% moves. And I separated the whole chart into like a ladder of like 100%, basically, using like a logarithmic scale. Not 100% and then 100% of 100%. That doesn't make sense. It wasn't, compounding or something like that. It was just the way that I measured it out. And then I created this like ladder, and I found that it was indeed correct, that there were, every time it hit like the next wave, it would just pick it up and go from there. And they were stagnated, like, so this would be like a high low, and then if you go in between the two, there'd be like a low high kind of alternating. So yeah, I see it. I see it's at 303. We'll have to check it out. But I suppose this would be it. So this would have been the motion. And then I guess yeah, I don't know. Something like that. Where this is basically the center. So that would be your wave formation up into the third. If you were to do kind of the same thing. I deliberately didn't pick the last bit here, and that is curious, because now I do wonder, maybe it might be possible. But then again, isn't that kind of what we're saying here, is like it goes down or goes into that point and then reverses. If it were really like a true rotation, a true rotation would look nasty here, because it would go up, down, up again. It'd be like an inverted distribution. It would look gross. Yeah, it would like not quite get there, and then it would drop back towards, I don't want to think about that. Yeah, it wouldn't quite get there, and then it would drop down to like 15. It would go to like 43. And then on October 3rd, it would dump all the way back to like 15 or thereabouts. Maybe not that far. Maybe it just goes to this one, to like 21. Yeah, that'd be weird. I don't really want to do that. And then it goes up again like later. That'd be really bizarre. I don't like to do the rotation stuff as much. I do it every now and then, but it'd be better to interpret this right here as maybe like this. So, because like you do have some similarity there, I guess. Like this comes to the outskirts, and it's trying to find a bottom, roughly inverted, right? And this is the similar motion right here, where it's coming out, and it could drop. I guess it could have a massive drop, just like this has a massive spike. That's a strength test, but it's the other way. And that would be like if we drop down. So it would be reasonable. It just wouldn't be fun. And that's actually a real rotation right there. Yeah. Ooh. I hate how nice that looks. That does look pretty nice. But that would be like a real rotation, is that you would go down and then pop. It's like this move in reverse. But then I don't know what the heck to make of that. It's not like you would do that twice. That doesn't really make sense. Like on the flip side, it doesn't really make sense. So yeah, I could see that if it distributed below here again, and this is the level that dropped. Taylor Swift, the official release party of A Showgirl, comes to AMC theaters, taking it to movie theaters in 100+ countries beginning Friday, October 3rd in the U.S. and 18 others. Well, there you go. Now you got a reason to run. Or to squeeze on that day. I don't know. Yeah. I could see this as a possibility. This is a weird rotation, but I guess it's possible. 15 all the way up to like 50 is a really big move. My guess is the reason that this is happening though is probably because the reason why these numbers keep coming together so nicely, yeah, is because I think the middle, this 28 middle, which I've been talking about, is like right between those two targets. So like everything is just sort of flipping on itself because it's equal parts around. That's all. So this is not an inevitability. It's just there. It is a real target, which is why I have it on the chart. Like I knew it was a target when I found it. It's a bear target. We'll see. But remember, like every bear target, every bull target, they're there, but they don't always hit. Sometimes you get both, but that'd be pretty unusual. I don't think it'd be that unusual this direction. I think it'd be more unusual this direction to come all the way back down again right away. Make more sense to go up and then kind of stay elevated for another push. But if it went down, I think I'd be more inclined to think it races up again. So anyways. Okay. You get the idea. So let's take a look at I think that's pretty fascinating. Let's go to October 3rd. Yeah, those are your two main competing motions. I still don't have the one that I wanted to get though, which was the I don't know where it went. Maybe it's on another chart. I bet it's a different chart altogether. If it's not in the first couple groups, it's probably not here. I'll do it again. It won't take but a minute because I know where the lines are supposed to be. It looks like AMC's at 299. I mean, it's fine. If it ends the day at 295 or something, I wouldn't be upset. I think that'd be fine. Pretty easy like that. Running into some issues. It's not looking correct. Maybe I underestimated my ability to do this again. I'm pretty sure that's correct though, because it's like I remember it being the same parallel as this, there, and there. So maybe it's the second one that's kind of throwing me off. Let's try this again. Yeah, I think that's reasonable. It seems about right. And this is where the big breakout happened right here. And then the drop in right there. And then that's where this drop happened. So these are really important because they are, in my opinion, this is kind of a signpost for like a bigger wave move. I don't see it as just tiny local things. I had done a whole diagram on this a while back, but I think of it as a, if you think about this as like a macro double bottom of sorts on like a trend, then it makes a little bit more sense. Still not sure about that though, because keep changing it, Booksy. I know. It's got to be like really, really close to perfect. If it's slightly off, it makes everything else seem kind of off. That looks right to me. All right, the big picture was more about what was going on here. Yep, on this walk down. So the reason this mattered was because this bottom, we were just on it here and we came back to it. And that's why I was saying it looks really good. The danger being, again, that it hits like 36 and dumps, which did happen back here. I mean, you can see it went through, this is kind of the counter argument. There's always something, right? So it hits that bottom and it goes all the way up to the top and then it dropped again and went low. And then it rebounds over time, of course, and does come back. But this particular wave, make it a little lighter. We just hit it, and I think we've double bottomed on it. The way that I had it was like right there, so it looked like we actually kind of dipped below it, like a strength test would. So there's a real danger here for sure. I think it's the same chart, guys. You see that? Because it come back down. It's everything's in the right place. Isn't that weird how that works? So if this went back down and filled that gap, if it did, it'd be kind of like a double test on that trend exit. And if on October 3rd it's only at 35, and it's the same chart that we just drew. And then the question is, why then do you have it the middle here? And I think it was because of another wave setup. But if you look at this S curve now, it changes it, doesn't it? Yeah, there's no doubt in my mind that this is here at like 50s. I know it's there. But that works when you go to the bottom. Like this. But if you just went from where we were here, I'm ignoring the 3rd of October right now. If we just go to where we were, at least the first one, where we were here on May 9th, you really shouldn't go beyond this mark because that's the midline for it. And then your middle is not the 14th of February. That's like a broader middle here. That works if you're doing like a bigger one, but if you're doing the smaller one, it actually doesn't work as well. This is a better middle here, which kind of makes sense because this is where it jumped the creek. We did get that weird like second move, which I find to be odd. You know, that second move is really bizarre. That second push-up right there on that widening. It's very strange. I don't know if you guys can see what I'm doing here, but I'm measuring across 2 different markers. So I'm going to maybe this one like yellow. So from yellow to yellow, you can see that cross up. It looks pretty clean, and that adds credibility to one theory, which was that this is going to go to like 46 or so, maybe even as high as the 50s, because that does actually mathematically work quite well. If you go from where this breaks down to across the middle to where it breaks out here, this motion creates a center mark right there. And that little center mark may seem inconsequential, but it's the same marker that we run through right here. So if you take the same thing in principle and you use that middle marker from this time period on to the next, and you look at where that drops through on the 14th, which is right there. So it's like, where does it backtest? Look at where this ends up relative to, again, that same mark. And there's different ways to, I guess, interpret this drop through, because it could be like way over here. I was looking at it like this guy, like that. So this would be like next Friday. It should be like way up there. See that? So that was like a different method for measuring out. And the reason I did that was because it was actually highly consistent with what you see. So it's like, where does it return back to yellow, basically? Like the top yellow line. And it was very consistently the same. Yeah, and then this one's a little off because it's lower, and I don't know exactly what that means, but it's right here. You can still see the same middle reaction right there. So it's where it should be. So like, these are really consistent. I'm like, well, that would be nice if it were that consistent. We'll see if that works out. But it's like this back test on this middle before dropping down. So yeah. Another way to look at this would be to look at the RSI crossover. There's an RSI cross up. That's like an RSI bottom. So the RSI actually crosses up on the daily right there. And that's another way to look at this, because this is actually the low point on the RSI, and it never gets lower again. And then if you go to this region right here, this does come lower again, but it is where the RSI crosses the creek region on the M cross. You guys are like, no, it's not, Booksy. No, it really is. You guys are like, you're like, it's not, Booksy, look. No, it really is, though. No, but it's not. No, but it really is. You guys are like, what? Shut up, dude. The point is like, it's the middle of the wave, as I'm trying to illustrate. So as an approximate measure, that should be really where the middle of the wave is. And you can see it right here. This is where the RSI is really low, and you can see the cross down right there. And then this is just a backup to it. It's running up hard now, but. So even though this kept going lower, the RSI never goes down again significantly. It kind of stays right there. So, two different ideas, right? And they're both reasonable, so I think they're both possible. Like they both seem probable to me. So one is that you don't go up past, this would kind of be the more bearish approach, is that you really don't go up past this marker here. You get stuck at like 36. So that's kind of a bummer, but that is what it is. I think if we do that, and I'm not 1,000% sure, but maybe maybe this back test doesn't happen. It almost makes me feel like the back test doesn't happen if it does this. I'm making it look like it goes. I kind of think a back test might actually give us more bang for our buck. Like I feel like if we went ahead and back tested, we'd probably be more likely to go all the way up. Because then you've already checked that mark. And if you don't, and you just exit, there's a decent chance that we kind of top off here and then come backwards and sell down. And I don't know for a fact we're going to get as low as I said. I said 14 or 15. We may not get down that far. If this holds up, I could see it stopping kind of like we did here. And this is like a huge squeeze moment for the stock, right? If you guys remember. That would be really ugly, but I suppose it's possible. None of these feels like it has to happen, which I guess is a good place to be. Upside in either case seems more likely as opposed to just dropping down. But if it did drop, just drop down, I think you have a lot less to worry about. It's the least stressful, to be honest, because if it just drops down, I don't think it's going to keep dropping. I think it goes down low. Maybe you get down to like the 15 to 17 range, and then you're just going after that. There's not really a lot of reason to be worried, you know? There's never like a huge reason to be worried in the market, but especially if it just drops down, I think that I just feel like that's not that big of a deal almost. It's like, yeah. It'd be pretty chill after that. I would be much more like, all right, we're going to go. You know what I mean? Like, there's no questions. For me, anyways, that's the way I would look at it. There's no questions about it after that. So for whatever reason, we just dropped. I actually kind of think that'd be a little bit less stressful. You guys are like, oh, I thought you had like YOLO'd some October calls. Yeah, I did. But, you know, the chart is what the chart is. I'm not going to fight it. I'll just roll them out if something looks bad in the next couple days. 1, 2, 3, and then 4. So if the 4 fails and it hooks here, so be it. You guys, it's GameStop. I mean, sometimes these things go our way and sometimes they don't. I could see it going either way. I'm not really looking at AMC, but I'm looking at the numbers. Yeah, I mean, this still seems possible. It's there. That's the thing. I think they're just windows. Like I don't know if they're pathways, right? I'm not really sure there's a right way or a wrong way. People really want there to be just one way, like that's going to work with this, with a chart, but it's not. This is not some. I don't even know what the right word is, but it's starting to happen more now. I'm getting older. I forget words. I'm told that it gets worse. I used to be really quick with my words. I was very, I mean, I have a decent library of words in my head, but I just catalog. It's harder and harder to recall them sometimes. I think I was thinking of ontological. Which is just the nature of being. I think that was the word I was looking for. Oh, I did. There you go. I remembered it. Took me a minute. An email. Yeah, that's like a Investor Connect kind of thing. So the news tonight will read AMC rallies on news of Taylor Swift concert, right? Are they right? Well, yeah, partially. Hmm. You know, this number actually looks kind of low. Maybe I can't put my finger on it because it looks like that should be like the bottom, the 290, 291, 292, which is a throwback to like 2020 times. Because of where this upthrust was, it looks like that's kind of the way it's bracketed, but then this is all chopping along the bottom, so it actually had established new lows. So there's like two middles. There's two middles to this S-curve. So one is at 4, which is the more logical one because it's between the top here at like 550s and the 292. It's directly between the two. The other one is slightly lower, and I think it was based on where these guys hit when they came up, which was like the 370 mark, which makes sense. Because we had talked about, like at that time, how it never came back. It left this weird area open, and I thought it's going to come back there, probably rally once it hits its bottom, and it did. But now it's created like two separate floors, and this is like a 257, which makes sense. That was another area that I thought we may hit, but we never came back down that low, so who knows. That's interesting to think about because they had given us, I think, some evidence that that might happen at one point. But anywho, so this is a different, that might not be the best way to describe it because it's not like either or. I think it could be both. I think both matter. So it's not a question of like which one is right, I guess, as opposed to really just, I think it's just both. So I almost like this one better. I feel like it matches the S-curve better. It really does. It's very nice, neat looking. Close to perfect. Maybe not perfect, but close to perfect. Assuming that I have the middle right, and I think that's correct. However, if that's the case, does that also mean that I have to adjust this one It might. I'm not sure. Is it the same middle? Mm-hmm. Well, it can't be the exact same because it's obviously lower. And then there's a question mark there because that's already beyond it. Like we missed it. That was on the 15th. So you'd have to use this one, which is where it dropped down, the secondary place, which actually seems right to me. So that's October 3rd. You'd have to use where it crossed through it. I was like, this is getting weird. So this is like a completely different one. I'm taking back what I said. It is different because you have to draw it through the secondary motion there, and it doesn't go as high. It only goes up to 616. Ooh, that level 616 is actually good because that level at 616, that makes sense. This is still like October 6th. I found this one before when we were first doing the measurements because there was an October 6th date, it wasn't October 3rd. And I think I said that earlier in the stream, that I think it was the 6th, not the 3rd. Yeah, this looks more accurate. Now if I take this, it's a different setup, but I'm going to use just a really simple measure here to help me with the drawing of it. What are you doing, Booksy? So like, you know, oh, that's like right in the middle, right where that pop is. That's fun. No kidding. That's like a halfway point. That makes me wonder if it's divided, but I'm not going to keep doing that. Like maybe each of these moves is divided in half, you know? So like if you did the next move, I'm doubtful though, because I guess that wouldn't make sense. Well, that is where it stopped. All right, let's leave it alone. I don't want to do that. You probably have to use the drop down ledge and they get complicated. Anyways, so there is a projection here that I was just thinking about. We had the October 6th projection, but it targeted what is a fair value gap that was left here. There's not that many of them on the chart, and I can't recall where I had placed the I did a graph of it at one point. There's not that many of them left. So a fair value gap is where you have one candle and then a second candle that's like maybe bigger, and then there's like an empty space between, right? And you can see like one is right, like one would be right here. Now this is on an hourly chart. So you could use any time frame. You have to be careful with that because sometimes on like a small time frame, it looks like there's a fair value gap, but in reality, there isn't, right? That's a possibility. Like there isn't one on a bigger time frame because it does come down. Usually you're paying attention to that, so you wouldn't make that mistake. But there were a couple levels that have them, and one of them was right here. This is kind of fascinating. One of them is right here, and it's 620. And there's not that many of these left. So like if you go back and you look at, well, did it ever fill that, right? It did to a degree, but there's just not that many. So because we actually filled almost every single fair value gap we have with this gigantic upthrust thing that happened here, we actually went back through like all of them. So there are none at all. There's only one. You guys will like this. There's only one. It's not because it's just a gap there, but there is a gap there. And it's like right here and then up to about 14 something, I can't remember, is where it starts. So there is a fair value gap there. But I did it a couple different ways, and I looked backwards, and I think there's another one like right here, since that gap is technically like not filled in regular trading hours, right? So the reason that this one is a little bit complicated is because it actually is not all a gap. I think what it was oh, I can't see it. That's weird. I wonder why it's not showing up. Ah, I don't like it. Actually, none of my stuff seems to want to load. Well, whatever. So if you look at the chart shift, it's actually not as simple as like, oh, there's just a gap there. That's true. There is a gap there, but there's like an actual like after hours gap there on that split date. But if you look at where the fair value gap would be, it's not quite this large. It's actually a lot smaller. It's like down to here or something like that because there's chatter in between there and there. Like there's all this stuff. And so if you go to like a weekly chart or something like that, all of this is like actually fine. So the actual space that is needed for a fair value gap was like 16 something or 15 something. Anyways, so what I noted, which I thought was really curious, was that when you came down, they left one here, which is right on that October 3rd ledge. And then they left another one right here. And this has not been filled, right? So look at where I'm drawing this and you'll see why this is fascinating. I didn't make that up. Like it really is right there. Like that's the only place there is one. And you can take it up a little bit higher because it did get filled a little bit. What's crazy about this number, guys, is if you remember, is that you guys like no one's gonna remember this book. See, I don't know why you keep saying stuff like that. What's crazy about this number though is that if you go back, this 615 area, this 613 area, that should sound really familiar if you've been on this channel over the last couple of years, and especially if you're like a regular. That was the level that I suspected was like an actual middle level. I said it's a really weird ledge here. It doesn't really make sense, but I think it's the actual middle level. And I went back and I looked at, you guys are like, well, you could say that now. No, I promise you, I can't go back in time and find where I said that. It had to do with a lot of things. But I think one of the biggest reasons that I thought that was the actual middle was it had something to do with like the measure. I'd have to go back and find it. I don't really even know. But it had something to do with the measure of like, again, like where this was relative to sort of where the gap zone was, like here, basically. That this was the actual center mark. And then this movement itself, if you go back to the top, this movement itself had like a significant impact. So I had used like an averaging system to try to figure out certain things. Anyways, point being, that is the middle. Like if you look at where the bottom here is in the top, that's the 497 area. That's the next big fair value area way up here. So the two markers that seemed most probable to me, this is like the range build out, right? Like we create a resistance here and then move on. We create a support here and then move on. This is like the range build out. This is the only place that your operators left on that drop down. This and then that $8 region, right? So I was like, man, that's crazy because that is actually like a halfway point back to the top here, which is at the 15-16 area, which is a lot of the place that I've been saying like, oh, I thought we might get to there later. So it's pretty wild to me to see this now. I'm looking back like retroactively. I'm like, golly, I took these things and just kind of ran with it and just kind of was like, yeah, whatever. Maybe it'll be important, maybe not. But there's something about the 613 level. That's a weird number, right? I remember I kept saying that, like, I don't know, it's a weird number, like 613 or something. And now I'm looking at it and I'm like, well, there it is, right? Is it gonna hit that? I don't know for sure, but there it is. We could go up higher. Like I've been saying, like it could go up to like 8s or something, but ultimately like that's the marker I think it needs to hit. And when you look at the that wave, it's like, ugh, that's disgusting. It's right where it should be. Yeah, basically it's a huge retracement. It's essentially like a 50% retracement. I would guess also, without even going like too far into this, I'd probably guess that these are actually fib levels too, just on the basis of like where that is. We already know that's the 50%, and then the golden pocket level, I can't quite get it right. It's like right above there. It's like 380 something or 1490 or something like that. Yeah, that's the 6.5 and the 6.4. That's right there. And then that's the 8.54 and the 7.86 right here. So this was actually a retracement. Eventually, I don't want it to just be retracements, right? Because these are really just bearish retracements. They're not bullish per se, because we're really talking about backing up. You can see back here, we actually went through all of them, and then it looks like on the way up, these were the fibs that were built out. So it built out right here on the 8.54. There's definitely a gap there still below the 8.54. There's no doubt about that. And that's at like the 12.13 level. But then there's actually a fair value gap right beneath 1, which is where this starts up top. I don't know. This kind of stuff should excite you. If it doesn't excite you, then you're dead inside or something. You're like, I'm not dead inside. What a mean thing to say. Maybe you're just not a fan of AMC. I don't know. You just want this whole nightmare to be over. I feel you. Anyways, this is basically like your implied move number 1, though, would be to like 6 and 6.13 area. I guess there's no other way to really qualify that than to just say I think that's what happens. And I have evidence for it on the chart, but that's about as far as I can go with it. What about all this low stuff you're talking about? Well, the thing is like it doesn't really affect it very much. It just doesn't. The idea of it going lower really doesn't mean almost anything to me. Like this looks nasty, and I don't really understand the timing of it. If it does something like this, that would be confusing to me. But if it's just a delay, it's just a delay. And all this really does is just make the move bigger in the end. Like this probably goes even farther, right? And then that first move is just huge. Like that's all it means. See, if you have a strength test that goes significantly below the floor, it's probably going to come back above this target region like about the same amount. So it's just going to be like a bigger move. It's usually approximately the same. So that would be the strength test zone. So it's just a matter of like, oh, it takes longer and it looks crappy, but it's still a huge move, right? Going into 2026. It's, I guess, could be potentially worse off depending on how you look at things. You know, if you think it doesn't move till November, then I guess it could be worse off. All right, just a minute. My wife is calling. Hold on. All right, I'm back. When can anyone hear? I had a phone call. I think I said it, but maybe you didn't hear me. I was just trying to tighten it up. I'm just looking at some things. Yeah. All good. It was my son's English teacher said he was acting out. So there you go. I don't know. I don't know what's going on. Great parenting, man. You know, kids are kids. They go through their stuff. There might be something going on with them, but I can't know that from here, so I'll have to wait till later. We'll talk it out. We'll figure it out what's going on. Yeah, I was just looking at this. I don't, I flip the chart upside down sometimes because it just helps me to erase a little bit more of my bias. When the chart's upside down and you're charting things going down, it's like you're not really charting like these massive melt up moves. You're really charting what is normal for AMC, which is like these sell down moments. And I don't know, it just kind of gives me a different perspective on things. So there are a lot of gaps, and I know that y'all are aware of this, but there are a lot of gaps on the way down here. We're talking about stuff like fair value gaps. Those are really not as important on AMC as maybe some stocks, but there are a lot. Like there's a lot here around the 380, the 360 mark. This again, it's just a repetition of ideas, but like that makes sense. That's the area that we wanted to get above and hold above. It makes sense to me that that could be a flush, that it could do a sweep there basically and go through it and then back down. So there's always that idea of like, yeah, that would be a reasonable place if bears somehow stopped the advance and and the operator didn't really want to push through it. That would be a reasonable place to do that, for sure. And so I think we're right about that. I'm not thinking that this is going to happen, but this is just the way that I'm looking at it right now and like how would it go. I think that when you see these things upside down again, it gives you like a different way of imagining it, I suppose. So like one thing is like I'm looking at this now, I'm like, well, if it did go up, would it have to go all the way back or could it hold on? Could it just be a back test here? And this is more or less what we had imagined anyways, which was like pumping up and then coming all the way back to like 316. But looking at where it is, it's like, yeah, that's a kind of a messy spot if it's back down into October. That'd be a tough spot to be in, October 3rd. So I really don't want that. I don't know what's going to happen, but hopefully it's not this. I think that would be kind of crappy. And then this gives me the sense that this could be like an M cross that actually still isn't done yet. So again, I'm not trying to like make things bearish that aren't bearish or this or that. I'm just imagining it so that I can think through it. And this is normal. So if this were to go down, like if we saw this from a bullish perspective, not upside down land, you could see how like that could easily be like a push of resistance. And then if you didn't hold here, or if you did hold here, this could go back up and push the top. You could also see how like there is a model in which this drops down, but it makes a higher low. It's like a double bottom kind of thing, but it makes a slightly higher low and then re-advances back towards the top. Sort of like that, right? And you get this kind of series of, so it hits like 380 or something, right? Like this dude. and then it reacts strongly up, but it's really just going back up to redistribute, and so it would go back towards this level. Normally what I would do if it were the other way around is I'd be looking at this, and I would say that that's probably the most important one right here. So again, I like to flip the chart every now and then just to kind of give myself a break mentally. It makes it look like a different chart, and then I can kind of see it and work it out in my head where those resistances are. So we're on one right now. And that makes sense because I think between like 305 and 295, you have to have some support here. And we'd already mentioned that early in the day that I thought it could end up at 295 today or something. And it would be sensible. You need to build out some kind of a support here to drop, or I say drop, but to run it. There's a little bit of an inverted head and shoulder kind of thing going on too. I wouldn't put too much emphasis on that just yet because that really goes back to, I mean, that, to me, that just goes right back to what we were talking about before, which is those parallels. And I don't find that to be particularly interesting in so much as I think that it's just there. You know, they are there. So as you go through these, those parallels become relevant. And I had kind of mentioned that early on in the stream that I really wanted to get above those. I think we kind of ditched them. So I'll bring them back. You guys are like, you're just doing the same thing over and over again. Sometimes. That's the one. See that? These are the ones that I think matter the most. I don't know. I need to just kind of consolidate and have like one chart. I keep doing like the same thing over and over, but these are the parallels that I think probably are the most important. And like right now, you can see that we're on the cusp of breaking one. Now you might say, well, isn't that kind of like a weird one to need to use because it's sort of in the middle of nowhere? But remember, like within this noise, even though it looks messy, this is where the iterations are finishing up, right? So within this noise, even though it's messy, this is where the consolidation is kind of ending its run. So even though it may seem a little bit odd to use such minuscule markings, I find it to be really important to maintain that consistency, and especially that last one, because that's the first one that we're dealing with. Like power guy out there. Yeah, this is the one that I think I marked off. There's more there, but that one, we definitely hit it. And that's like right in between the 1, 2, 3, 4. You see the cross up right here. It's a really important little mark on the chart. So if we're going to run, these are going to be used as like your shoulder markers, basically. Because when AMC melts up, it doesn't use like horizontal markers. When it starts using horizontal markers, it's usually not a good sign, because the only time I've seen that happen is when we're in a distribution and it keeps going really, really low. We're really not intending to run it. That's happened more recently when we were building out to like 4, just really slow moving kind of stuff. And ultimately, yeah, and then this one, real slow moving, kind of horizontal markers instead of like a steeper mark. When I look back at 2020 and other bigger run-ups like March, these parallels run, they run the show, you know, all the way up. So they're usually the steeper ones. That's the squeeze one. It's the one you want. I don't know where this one is exactly. I'm going to go with what has the most hits, which kind of seems like it's in the middle. Something like that. So this is the general structure of it. And then when you go back, and I think this at this point I'll probably just flip it back. When you go back to the should have used that one. Should use that low right there here. When you go back, this actually goes all the way up back to here. These are not again arbitrary. They're very, very much like a part of this movement. And I went and looked at this, and this is the same as 2020 as well. Eventually in 2020, it came up to the topmost parallel, which is very exciting for us because that's like really high. I don't know if it's going to ever get there, to be honest. You guys are like, well, that's super far, man. It's like way out here. Yeah, but if you look at where this is in December, it's at like the 1980 area. So it may seem like way out there, but we were just talking about like 1960s, and you're like, where's that? It's like November, December. It's not impossible. It may not be what happens. It may take longer and go a little higher. I don't know. That's also right where the creek jump is, right over here, right up in this region. The big creek that comes down comes through like this area somewhere. I don't know. I'd have to go look. Again, it's like up here or something like that. But anyways, I digress. So this was a method of just measuring out. Seeing where these things are. Kind of like that structure. Anyways. So these parallels should be what run you up to the top. So one thing you could also do is check to see if that makes sense. Does that intersect, you know, a logical parallel there? I would say the answer is like sort of. It sort of does. You can see like right at the April date, that would have been a key date in the market for determining a lot of this movement. We don't really need these fibs anymore. If you want them, you can put them back on your chart. It's just more noise on an already noisy chart. Oh, BULL got some extra boost here. Yeah, I came back up to the top again. That's nice. Yeah, everything kind of like popped and it's just kind of sitting there. Nothing went as high as I think it should have gone. Oracle did the same thing. This is a diamond. Even if the throwback affected the breakout, it should have come up to 309 to 308 to 309. It just didn't. It's just sitting there. Bull did the same thing. It just came up, didn't quite hit high, and then just went sideways. It did a creek jump. It didn't really check the creek, but this is looking a lot like AMC, doesn't it? Kind of like came up and then it's just sort of chilling out. So maybe you're getting a little bit of a tease, but it's not quite going yet. Seems to be the case across the market. Yeah, so I don't know. That would not be a date that I would look at particularly fondly, the April drop, but it is pretty close to that time period. And it also doesn't really make a lot of sense as like the middle. If I remember right, I think the middle point was like this one. It was either here or here. It was one of these two. And I don't recall which one it is. And what I mean by the middle is I mean from here out to the final. Unless, of course, it's not done yet, in which case that wouldn't be the middle. But like here to here. I know, I'm doing it really weird. I guess I could do it with I don't know. That's interesting. September 29th. I didn't do parallels all the way down because I don't know what this is just yet. Because if it's just a hook, then I wouldn't use it. Obviously, you could do parallel, but I wouldn't do that normally. That is right in the middle. That's a full rotation right there. Here to here. And that's the center mark. So I was kind of right. It's basically like right between these two. Anyways. So those are possibilities. They're not guarantees. But those are possibilities as like middle points. That kind of lends itself better to this idea of coming up here, doesn't it? Just to hit like a halfway point. Maybe it will. Maybe in extended hours it goes all the way up to like 750 or something. And then it drops back. I could see something like that, hitting like a really high number and then coming back down really, really fast. Kind of like we did in May. Just getting that extension, but then like we basically open up at 620 or something, or we drop down and consolidate there and then continue. So it's not that that's not important. It's just that this was like more or less just an extension zone. I could see that. That's October 6th or 7th as well at 782. So that would be like halfway to the top. But remember, this is the liquidity shelf that ultimately is more likely like an actual halfway zone. So if we think that this is like an extension, that's fine. Really weird looking RSI on that 1 hour. If we think this is an extension, that's fine. But I almost wonder if this is still more accurately like where we're consolidating. It's just like, if I were doing this and I didn't have any of those other weird ideas that I have a lot of weird ideas, right? I think what I did is I mapped out like this as a walk up, and I was looking at where these head and shoulders might be. But let's say it just melted through them. You could walk down through them again and come all the way back down to like 4. That's one possibility. That would be kind of crappy, but you could. So if you like really wanted to like retrace and come low, you could do that. If you wanted to stop there and like back all the way back up to like 4 or something like that, this is the time to do it. That's a possibility, you know, and then go again. But another possibility could be, again, like this backs up really fast and then it looks a lot like your January move. And you end up with a breakout here. This would be most similar because this was actually a halfway point. And then it pops up to the top. Yeah, it was an approximate halfway point, their zone. This makes a little bit more sense to me on some levels. Do I think we'll be there by December? I don't know. We could be. It's hard to say. I used to think that January was the more obvious date, but something shifted when we came down here because they've been using the 3rd week of the month more often than anything else. So that OPEX time period, right? To some degree. Because like it started on August 22nd or something like that. It was really strange, right? Now we're in September and we're going to be on the 22nd on Monday. The dates, the idea of running in like the first couple weeks of January don't really appeal to me as much. And I'm not sure if it matters as much because the timing here is just different. And I measured it a couple different ways, maybe a month or 2 ago. I didn't get January, I got December. That doesn't mean I'm right, that's just what I got. So I thought, well, I'd be kind of curious to run in mid to late November, like November 20th or something around there, right? Thanksgiving through the early weeks of December, like going through the 6th and stuff. But then I looked at the FOMC dates and I was like, no, that makes sense because the rate cut on the 9th, I think, or something like that is probable. So then there may be even another one. So there's like a possibility of a catalyst event there on the early December. You take that with a grain of salt, but I just think that there's maybe something to that. You know, there might be something to that. Yeah, so I don't know. This to me does make sense. If you're just looking at the walkout, I don't know if it'd be this simple, but and it build itself out into August or February of the next year where it like breaks down. Why does that have to break down? That has more to do with the bigger picture, and I think there's a need to. This would be a breakout on the macro level of the biggest possible creek. I've been through this. I think I did this even last time we were on here. But if it goes up that high, again, that's the top right there. So, I mean, you're talking about, yeah, if it did it right now, it could hit 15, just go straight to the top. Imagine, right, waking up Monday and it's $15. You guys would poop your pants. I'd poop my pants. You guys here are like, nobody's pooping anybody's pants. Wait a minute. It's getting weird, Booksy. You'd be pooping people's pants. I mean, it would be something, wouldn't it? To just like wake up and be at the top. I have dreams like that sometimes. They're called fantasy. He's a poopa. Potty poopa. Anyways. There is a possibility of a move kind of like that. And I did something similar a long time ago. And that was with the this breakout. So, well, consider me Miles Davis. I looked at this as a possibility because entry and exit trajectories are often the same. And there's a phenomenon that happens with the drop-in sometimes, but this is where things get really dicey. Because you're like, well, yeah, but you did the shift value thing. I know. That's why I'm not sure how this could possibly work. But if, for example, somebody opened up a boat ton of short positions here and they exited some here, maybe not all of them, it is possible that, you know, there was a huge amount of probably selling that happened here. It's very possible that they cover all those all at once at one point or another. I'm not sure if that's the reason why this happens, but I have noticed that is often like a measured move. So what I mean by that is if you go back and you look at drop-ins, there's a weird phenomenon that happens where the drop-in, it's like you have to measure it right, and it's a little nuanced, but you basically go to like either the first bottom or like where the center liquidity is. It's like an approximation. So if it drops in and it consolidates a lot and then drops again, sometimes I'll pick the first consolidation point. Not necessarily where I think the lowest point is. This is my theory. My theory is that they start the range with a huge amount of short selling and they don't actually do anything with those shorts. Like they may cover them, they may not. But I think that part of me thinks that they don't actually do a lot with them. There may be some of it that's covered, but not all of it. I'm not really sure how else to say it other than I think this is a real thing, okay? So then there's this phenomenon that happens where so I'm trying to give you reasons for something that I really don't know if I have reasons for. This measure on the drop-in often equals, when you jump the creek, often equals the target region for the breakout zone. And I don't really have any strong other evidence for this. It's just sort of a yin-yang thing where I can see why that would happen. If the reaction is really strong, you should have kind of an equal and opposite reaction the other way. It's like physics or something, right? The energy is like returned. But I think that there may be another kind of idea going on with, again, like why that's actually happening and the build out for that. So like this is often the case, is what I'm trying to say. And I know that it looks like I just fudged it, but I really didn't. I promise I didn't. It really is. It's like it's building out a case for the exit. So sometimes like this happens upside here. It happens on the downside quite a bit. And if you go back and you check out some of these early measures, it's like an offset of the, again, it's like an offset almost. So look at this one, right? This is a similar kind of setup. There's a big drop in right here. And I guess it depends on how you want to chart it. Maybe I should do it like this way. And you can see like this measure by itself actually looks pretty darn similar for some reason. Oopsie. And again, you may be saying, well, that's probably because they're generating like a channel. So they're using like a channel move, but they're doing it like twice, almost off the same level, but slightly higher. Yeah, I agree. But then they've offset this bottom as well. But then the same exact move here is actually often used in the drop in to come back to that center liquidity. So like looking back on it, this is where that drop in occurred. And then this is where like the center liquidity is, like right here. And this is ultimately where it breaks out. So it's kind of strange. And then if you go back and you look at that, again, you're like, well, yeah, but of course it comes back up because it goes back up to retest that top. But that's the point. Like I think this value by itself is a very important valuation, right? So sometimes I pick up that value quite a bit when I'm doing stuff. You'll see me like grab it. And I've been doing it a lot, right? I'll grab that value and use it for certain measurements because I think it's a legitimate thing. Oopsie. That's cool. But I'm not going to use that. I think it's a real thing. I don't think it's just a really bizarre way to measure stuff. That'd be pretty strange. So when we first came down, I had measured this move and I thought that it might be where that drop ledge is down to about here. And that should be the measured move. And that move is very similar to this initial reaction right here. It's almost identical. Again, kind of depends on how you measure it. If you go from like absolute top to absolute bottom here, and then you use that gap top, is it identical? Probably not. You know, it's kind of in between these two. So do I know if this is like perfect? Not really. I probably could use a better estimation by using like a level, like something like this, right? And that's what I've been doing and trying to say. I think it's the drop ledge, but it's really about more where the support was versus the bottom. That's pretty darn close. So that's the first reaction. Yeah? Yeah. Well, just like the other two, whether it's bearish or it's bullish, that's a measured reaction. Whether it's bearish or bullish, you might presume that that's probably what's going to happen again, but it's going to happen from either the bottom that was made, which is right here, which is very high. That goes all the way up to like the top. And you guys are like, wait a minute, Booksy, what the F? That's what I'm thinking. Isn't that the same as that level right there that you just did, that parallel thing? Yes, in fact, that is the measure of the parallel. So there you have it. What? What the? This measure is magic. I'm telling you, I don't really have like a real mathematical reason beyond just like entry and exit. Like intro and outro makes the sense. Bukowski talks about exit trajectory being similar to intro trajectory. Wave analysis does the same thing. So it's a possibility, you know. So yeah, you can see that move right there. it's built into this. Like, I don't know what to tell you. Like, it is possible. I don't know why or it would go all the way up to 15 all at once as opposed to 1, 2, which I think is a little healthier. But is it a possibility if this jumps above where we think it's supposed to jump above? Yeah, and that's why these parallels to me are like so ridiculously important. Now I'm kind of like, I wonder, are we about to just like rocket all the way to 15? That would be something else. I retire. Quit life. Oh, man. I mean, that'd be cool, right? You guys are like, yeah, that'd be really cool, Booksy. Why would that happen, though? I don't know. Why would anything happen in life? I don't know. You know? This move right here would be something else. And now I'm like staring at it, like kind of bewildering myself. Did I just do this on accident? Can't be like that, right? I mean, it isn't perfect, so I guess I like haphazardly did it. I guess you could say that. Yeah, you measured it, but like barely. All right, so that's 705. You just drew a box. Shouldn't count. All right, well, I'm not going to make a fool of myself. I'm going to try my best to make sure it's correct. That's 35.38. So let's just do it. Let's do the measurement. Why am I using a weird rectangle instead of good things? I don't know. Oh, look at that, where that middle is too. It's right at 15 like 85, which is that level I was saying. There's a liquidity issue there because I think that's the only fair value gap that high, as high up as it is. Of course, if it went to 15, I don't know if it would go. I mean, I guess it could go again, but I don't know if it'd need to go again. That'd be a bigger question because it'd be bonking its head on the top. So that's a tricky one. Kind of like careful what you ask for, maybe. All right. So that's that. That's fixed. That's a fixed value now. $239. You got to be kidding me. Up to 1198. Now this hit 1190, but that 1198 is another key zone. That's pretty darn close. Pretty darn close. Next. But where does it go from? I guess it goes from, I guess it just depends on how you want to measure it. You could do it from the bottom, which might be appropriate. There's multiple bottom measurements. This would have to be 246. This would be a really good move. So that's 1232. Somebody asked me about 1232, I think a little bit ago. I don't know where they got that from. I said I didn't think that was very likely. I still don't think it's the most likely, but it's there. It's a measure. I don't know. I didn't find it to be very compelling in other situations. So let's get rid of these two because these are old measure. 1364. Is that what you did? Is that what you got? Well, the other one is, let's see where these intersect. So the current bottom, there's one other bottom, and then there's this bottom, which is the jump of the creek, which we haven't actually made yet, so that hasn't happened. So there's 267. Is that how low it went? 267, and then there's another one Difficult to say. This is going to be a bit more of an estimation because this one has I don't know, there's question marks about whether or not I'm correct about where this is. It's like really hard to know if I'm like right on the nose there. I'm going to put it at, I really want to put it at like 316 because reasons, but, or 317. So I guess, let's just do 315. I'll just leave it alone. That is weird how close that is to the right timing too. But I don't know if I did that on purpose. Let me go back and look. Nah, that was just random. No, I take that back. It was pretty close. It's like a couple, maybe a day or two off though. So it's a little slow. Looks like a couple 4-hour periods on either side of that marker. So I didn't do it right. I didn't measure it time-wise correctly. Unless it breaks out like today or like Monday, you add like 2 days to this. Let's see. 1, 2, that's 1 day. 1, 2, that's 2 days. That's today. So I mean, I guess if it broke out today, it'd be about the same timing as October 6th. I guess it's possible. Could be timing, could be the same. This is, yeah, 1341. Which, I mean, frankly, both of these look like they're in the same pocket as this blue marker. So these are very agreeable. And then this is 15, looks like 1576. Nope, 1579. Are we just going to go right up and hit that? How is this even possible? That bar, the candle is starting to look really big coming off the bottom. It's looking a lot like, it's bigger than what we got back here in May. And it's getting pretty heavy. Heavy, there's that word again. Is there something wrong with gravity in the future? Another reference that some people may not get. Okay, well, I don't think it necessarily matters that much, but they're all the same. I mean, thanks, Booksy. What I mean is, like, these are the same measures that we already did. So, I mean, that should be comforting, I guess, at the least. I mean, at least you're getting something of consistency. And then look at where the middle is here. I mean, we were right. It's right where it should be. The middle's at like 705. And then 615 would be a logical place to... Yeah, look at that. Holy moly. So this is exactly halfway. So we're moving, if we go over the creek, we're exactly halfway from this original entry point. That makes sense because we've done this before too, where that's like a halfway point on this wrap over the top. Now that I think about it. So this marker at like 705 is exactly halfway. What the heck, dude? Exactly halfway from 1579 down to 315. So the only real question that I'm going to ask, and I'm going to just keep asking it, guys. The only real question I'm going to ask is, like, how low do we need to go and, like, how long does it take? Because I don't think this is something that's accidental. This looks like an operator-driven action. The fact that that's like exactly where the halfway point is, that this measures exactly the same amount over the exact amount of time, the fact that the creek is right there, you say whatever you want to say, I guess, about my methodology, and it has been whack over the years. I've done a lot of different things at different times. But I'll tell you one thing, there's some times where like the wave is so tight that I'm like, the window doesn't really seem that big, you know? Like it's a really small window. You either take it or you don't take it. I wonder. No, I don't think we're going to go to 100. I think we're going to go to like 15 to 19, and then we'll see. What this represents to me is maybe not what I wanted, because I was hoping for that 1960. Maybe we'll get there. I don't know. Another question we could ask is, does it make sense to get there later and go a little higher, perhaps? Just because this is the target doesn't mean you could go beyond it at a later time. So if it did a second run, it only went halfway and then reaccumulates and pushes again. It may make more sense at that time to go a little higher, maybe in November, which stands to reason if you have a AMC earnings call here. That could be another catalyst moment. And that's really why we see a potential November, December, and then there's a rate cut December. Any chance of $100? No, I think the highest that AMC is going to go within the next couple of years, in my opinion, it's just an opinion, and it's based on the bigger wave here. The bigger wave has some potential. It had to get back to this mark, but that was translated down, in my opinion, down to here. So I had seen this as this 1960 area as a back test, and I still think that's probably true, because what we're doing if we hit 15 is we're going back up. It may not seem like it, but what we're doing when we hit 15 is we're going back up and we're retesting this bottom. Like that's the translation right there. That's the 226%. So it's like a back test on a previous bottom. If you look at the valuation, and I'm not going to do that right this second, but it's like a back test on the previous bottom. If you look at the shift valuation, that's where it kind of is. So the idea of what we're doing right now is really just pushing up to get back to that previous motion, right? But then afterwards, you kind of have to ask the question, like, where do you go then? Because I mean, you could just keep going, but in reality, you've kind of like made the move. You've backed up to here, you know. And then again, in the world of chart shifting and all that gunk, you could go back and look at this and suggest that, well, really, you're here. I don't like doing all that kind of stuff. It's going to get confusing. But if you think about it like this, like, oh, we actually did this, we're actually up here. The next thing that would be logical would be to come back and retest this creek. It really wouldn't be to keep going. I mean, yeah, it's not impossible, but it's not the most logical thing. And if you look at the multi-year setup for AMC, a lot of this stuff builds out 2027, 2029. It's long. This is a long wave right here. You can see it visually just staring at it, you know. So this is May 2026 from big pump right here, big drop right there, you know what I mean? So there's not really any reasonable, I mean, there's plenty of time, I guess what I'm trying to say. Maybe in May or something of 2026, we get another big move up. You know, and it comes back up to that level again, and then it creates what normally at that point would look like a cup and handle. And you would say that if it did something like that, you'd probably at that time say, yeah, it looks like that, you know. And then, yeah, I think there's a possibility going into 2027, maybe. We could also look at it in retrospect and say, well, I mean, technically, this just did a long-term distribution on the other side of that. So even if you did think it goes up, this could just be like a really boring period of sideways before making a decision. And that's true. Because then if you look at the extended time frame of when did this like kind of enter the range, when did it leave the range? I'm not trying to make this more complicated or anything. I'm just kind of looking at it. This is way out there. So reality is maybe that is not quite as fun. You know, we could be sort of stuck in a sort of a sideways period for a long time. When you take that and you push it back down to where we think the top is now, it looks pretty close to right. It looks like you're hitting the top, you're pushing the creek a bit, which is good. You want to push resistance. But it almost looks like an auto reaction with a giant phase B top because we didn't make a lower low here. And then you have all these other question marks, right? Like, are we going to are we going to go or are we going to come back? Then this looks right. I'm not going to go into any more huge detail here, but I'm just saying like a sideways region then just looks like an M cross, doesn't it? Of this major creek. This to me feels right. The idea of just popping and running feels not right. That just seems like something that people want to say when they're trying to get people to like give them money or like clickbait or something, you know, like I don't look at it that way. I look at it as like a wave. It's going up. If it pushes resistance, great. But then it just makes more sense to me to come back and jump the creek. And this may not be a fun answer for people, but it looks like it would take a long time. I think for GME and AMC, I looked at possibility of, I think it was like 2027. Yeah, this is like closer to May 2027. Does it make sense? I think so. Yeah, I think it makes more sense than maybe even like this, right? It makes more sense to me than anything else. And it could be maybe bad before it gets good, especially if you think this is like a phase B top. This could be like a second move. You don't know. We don't know where the bottom is. If that's the bottom on phase B, it may never go below 4 again after that. But sure, that would, to me, that would be more reasonable. And then I would look back later, which we don't have the information yet. But I'd look back later at stuff like this and say, well, like, well, where was the, maybe more like this, like where was the resistance at? Because they'd have to use the shift values, but like this, right? Like, did it come back down? That's a top, that's a bottom. This is a creek back up. Sure. I think you're more likely going to see a big move if it kind of holds above, it stays pretty relaxed, and then does something like this later. Then you've got a huge move potential in store for another big push. And this is where I think it could come up to that like 35 to 40 area more realistically. This is just, again, a 1, 2, and each one is holding. If, on the other hand, it's like this really anemic move and it pumps up and then it starts sliding down and never really pushes resistance, that's a different story. If it does not push the top at all, which is kind of what I'm suggesting here, like if it goes early, it may not push the top at all. It may just hit 1568 and shrink. And if that were to happen and you slid back down and you did consolidate maybe around 11 or 12, but then you drop through, I think you've got a harder case to make that this doesn't turn into like a kind of a copycat of what we saw into August right here. I think this becomes like a reasonable expectation that it's really not going to go, in which case your wave has it did do the check on the ledge, which is almost always going to happen, right? Just like here, guys, when I said this was going to, I thought this was going to come up to 4 because of the lack of test. That's the back ledge that it was left open when it dropped down. We've got the same exact thing here, right? But it's at like 15s. It's a similar thing. And that's why when we came up to 13, I said I didn't think it came high enough. Which is funny because I think most people were like, that's too high. And I was like, I don't know, man. It didn't actually go back up and retest that area, which is strange. Which is basically the same thing we were saying, like right here when it came up. We were like, why didn't it go back up? And then it does later, and you're like, oh, okay. I don't know why it didn't go back up, but it didn't right away. And instead they bring it down low, and then they have this rip later. I think we're basically sort of like putting out there that this is essentially the same thing. We've got one move, a big reaction that slides down, but there's no check on this area. Once that check is done, there's really no one size fits all. Like I have said repeatedly, and I mean it, that there's not really a single answer. If at some point in the future it does break out, you can look back. I'm talking about like way off in the future, right? If it's just like what we see here, but on a bigger scale, you get starting to see where I'm going with this. So like, this is like a bigger version of what we see on the smaller scale here. So if you're saying right now, Booksy, that you think this is kind of the same, I am. I'm saying that this is all like the same. This is what I like about wave schematics with iterative motion. It may seem nonsensical to a lot of people to do this kind of thing. I'm not saying that everything is a bars pattern. What I am saying is that this setup in and of itself, right, has the potential, depending on how you see these things, has the potential to work out in much the same way. So like right now, we're talking about this motion right here. I know this looks silly, I get it, but I'm saying that if you look at the distribution as just a top, it's just the top of a wave. And you look at accumulation as just the bottom of a wave, then any kind of a wave schematic should have some connection. Usually that has some really strong ties and some really strong tethers to each other. This actually is a pretty decent example. I don't like how obviously this is kind of different in that this slid and then came up really high and then blah, 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 blah. We can get into like the iterative nature of it all day, right? We could spend the entire day talking about iterations and all that jazz. But what I will say is that notice that this comes up and it presses against, which it did happen on the micro, that it comes up and it presses against the glass. It's like a cartoon character going, you know, on the glass, just like smearing down the glass. And you have that same concept that could happen right here. It's really the same. I know I drew it different, and I said this crosses up, this doesn't cross up, could be the same as this, could be the same as that. But the idea is that it's a wave down that when it reacts up, does not break out right away. Instead, it compresses and goes down again, which is exactly what happens on these push-ups where it doesn't quite go high enough. It never goes back up. It's like they're saving the move. It's like a canning operation where they're canning it for another day. And then later you come back and you're like, oh yeah, there it is. You know, the move was there, but it was just really late, or it feels late to us. You're really just like holding it. I don't want to say suppressing because that sounds like a really negative action, but I actually think what's happening is you're just doing a liquidity grab. Like you're just doing a long-term liquidity cause and effect buildup. So you're building a cause and then you're pushing it after the cause is built, however high. Instead of just like going up and exhausting it immediately, you're like building it up over time as you're moving down. So anyways, fundamentally though, these are the same ideas. So like, it's not a big stretch of the imagination to think, sure, this goes up, hits this creek, and then does not succeed in crossing it right away, because it did happen right here on the smaller scale. What we want to see is that markup, and this goes back to what you see way back here. There's like a double push. It's an M cross, right? 1, 2. What you want to see is that the second push holds its own, either a high or low, or if it's going to do a phase B bottom with a spring, that it's kind of like structured well, all that jazz. We don't need to get into that in higher detail right this second. But when it leaves here at long last, then I can take a move like this. Again, looking at this from the perspective of the same concept, you know, we were just talking about this. This is another thing. I'm like, I think about this kind of stuff all the time, because I'm like, I don't know how exactly other people view these moves, but like, this is the drop ledge right here, right? There's more than one way to kind of schematic it out. But like, these are the same moves. Like, they're fundamentally like the same thing. And if I take that and just plop it right on essentially like the middle here. So if you go from like top to bottom, where is the middle on this move? It's like right there, right? So then take the same move, put it on its own middle, and how far does it go? Oh, it goes the same distance. Like, it's the translation of the moves, right? So like, in theory, could this move happen again in the future, right, off of a perceived kind of middle line? Well, yeah. The difference is that the middle at this point is probably not going to be, I actually think it's probably going to be the $6 region, to be honest. I think it's logical. $6 or $7 is going to be the middle because of where this is. See how it resisted right there and then it pushed back? When this goes up through it, if it goes up through it, even if it only goes to like $7 or $8 and then comes below it, it's establishing that again as kind of like a center mark. I think it's probable that that's the middle. I do. So this gives me the sense that, like, yeah, at some point in the future, this may end up coming back to like that $70 area. I'm going to put it at like 613 or something. That's 67.92. That's very similar. It's not exactly the same, but that's really similar to like the original values. That's right there. That's really similar to the original values on the first push up. And my thought is that more than likely, without even like trying that hard on it, this is probably going to be like a parallel structure if it's going to work out that way long term. I could be right. It might be more accurate to do like this, because this is a push above, this is a push below, and then it regains the support there. If you can't see what I'm doing, I'm really just looking again at wave schematics. This is like down, up, but it takes longer because there's a huge creek here coming down, and we're really far away from it. Unlike the first time, we were kind of like right on it. So yeah, this is not like a, I don't know, I just kind of doodled this line, but it doesn't look completely wrong. It could be correct. Yeah, you're talking about like a flag. At some point in the future, yeah. But you can also just call it a trend. So, like, it's a trend until it isn't. So, I mean, this kind of emotion right here, I don't know. Again, I'm just kind of eyeballing it. That could be wrong. The trajectory of that, I mean, could be wrong. Like about where it is. I don't know. But if it came back to like a similar level, like the 50s or something, I wouldn't even be surprised if it was like halfway. Remember how we did that gap value level? It was like August 22nd to like the Judge Zern thing. That ended up being like a really significant marker. I would not be surprised if it is, yeah, that is the same. If it's like we're going to eventually come back to 67, 68, and it's pretty similar to the first move, like we think about it in those terms. But this would be way later, like 2027. Well, why do all that, you know? I don't know for sure that this is ever going to go up again, like really high, or recover, go to the moon. 67 is already really high, guys. That's very, very high. I think in the grand scheme of things, it represents a return back to center liquidity. So like I've talked about this before, but this is the this is like a halfway point between like the middle and where that original, we were basically brought back to that original opening value when the Judge Zern decision happened. So I feel that this is probably going to be, or not the Judge Zern, but the ape invention. This is probably going to be a pretty big wall for us going forward in the future, a ceiling. About, you know, maybe it does get up to 100 one day, but that's like getting back to like that opening price. I just think it's shifted down. And at that 41, to me, the 41 to like 67 region kind of represents the new kind of center value, if you will, for AMC. So do I think it's going to go way beyond that anytime soon? No. I think it'll be years. If then years down the line, I mean, I just see this as a very likely possibility that it does come up here, but it's going to be years down the line. So talking about this year, people ask me about this year. They're asking about by 2026, where are we going to be? I don't think we're going to go way beyond $20. I've already said that. I don't think we're going to go way beyond 19 something. I think we'll be fortunate to hit that and then probably going to chill out at like 15s and crap out by February. And I've been saying February 2026 for a while, and I've changed the numbers, but the date's been the same. I think later on, you get a bigger breakout. You probably run all the way up to the 50 mark. But that's going to be later on. And it's going to be after, I think, a lot of tribulation to the downside. So retesting levels, because why not? You know, if you're going to go all the way up there, you just rebuild a cause. Just the operator on this change, it was, you know, early on it was more BlackRock. It shifted over to Vanguard. And I think that the Vanguard team, not saying they're good people or anything like that. I don't know anybody there, obviously. I think that they changed it. I think they reset it here. I really do. And I don't think they got rid of it, but I think they reset it because they they swapped out their positions and then they've bought back in and they've held like 30 million shares this whole time. They've added to those positions. They've got a huge amount of shares. I think they're up to like 50 now or something. What happened to 40? I'm not going to go through this again over and over. I've been through this so many times. And you've been here for this, so I'm not sure. I'm not trying to be rude, but you've definitely been here when I've talked about this. You've been here like every time. I know your name. That's a good thing. I'm happy you're here. But I know that I've gone through this with you here. The shift happened. There was a double whammy chart shift that happened. I do not think that we are going to go back to 40 because I don't believe that the value of 40 means 40 on the chart, the way that we see it. Relative to itself, I think that our 1960 area equals this gap. I think that's the reason that they made a gap where they made a gap on the day of the shift, on the day of all that. It's the 226% shift value. It has to do with when I went back and I retroactively, it was on December, it was back in December of 2024. I went back and I just kind of walked backwards through the numbers. And I think relative to ourselves, 1960 is the, if you look back at the original lows, is the same proportionally as what looks like on the chart 45. I know that sounds confusing, but what I'm trying to say is that relative to the original price, that is an accurate valuation. If we hit 1960 relative to the original price, we would be here. That doesn't mean that I think 1960 actually eats $40. That is not what I'm saying. I'm actually saying something kind of different, because what I'm basically suggesting is that it actually is less in some ways, because the original valuation, if you recall, this was different. We were moving between like 4 and 6. No, I don't remember 70. I remember thinking 72 came up quite a bit in the math and some of the calculations. I probably had at one point a really high chart because we were using a parallel structure. And then if you use a February marker that's really, really high here, like that, you could say, well, I think it's going to go to 110 right here, right? But later, using what I feel is a more accurate depiction, we use like a lower number. We had like 80 to 90 bucks. And we talked about that pretty extensively and like where that would be. So yeah, it's possible at one point that I was shifting it from there. Later, when I did the shift value again in December of last year, which is almost a year ago now, we're coming up on it. That was where I was like, no, they shifted it down here preemptively, right? And then essentially what we're seeing is that the valuation is just different. So if you remember, this was like $4 or something like that, like $4 to $6. I think it pumped up at one point, maybe to like 8 or something. But this range was not that high. It was like $4 to $6 because it kept dipping into the 3s. And I did a combo chart, and the combo chart showed that the actual valuation between the two was like, it's fascinating because it actually didn't end on $3 or excuse me, the combo chart ended on $2.39. Like it ended at $2.40, which is bonkers because you're like, well, wait a minute, that's where it went. But why did it have to drop to get there? The reason for that is because we didn't just combine AMC and APE back together. If that had happened, then the $2.30 mark would have been like here, right? That's the whole point I'm trying to get across. The valuation here was already wrong, so they had shifted it down, so that was mathematically correct. And I don't know, again, maybe that's just the numbers at play, but it had to do with the market cap. But if you recall, the original bottom price was like $290, right? $292 or something. So why not, when you recombine them, if it's only supposed to be $230, if that's the valuation, then all we need to do is drop this when you combine them to $239. $239 would not have been way down here in the basement. It would have been slightly below here. So why then do we do some kind of a shift? Because if we have a reverse split, that doesn't change like the value, right, of the market cap. It just changes market cap per share. But that's where the split shift value comes really into play. So it's like the original valuation was already wrong on AMC ever since August 22nd. They had shifted it down, but that could have been arguably just a sell-off anyways. And then I think they were using arbitrage between the two because they were purposely using a back and forth method. And I charted it during that time, and I had an idea about that. It wasn't until here, when I saw the levels that were picked, that I realized that what they did was they basically had just shorted AMC and bought APE. And that made it possible that they basically were profitable all the way through the bottom, like easily, on both sides. And there was a sense in which it didn't make a lot of sense because they had dumped all these AMC shares. Like, how could they have possibly done that and made money on it? But because the AMC shares were overvalued, like they were already higher than they should have been. Like it's confusing, and it is, but I went back and we used, and I'm not going to go back to December and look it up. I trust that the math I did was right, because when I found the 226.36% valuation shift, I realized that really made sense, because you not only did you dilute with Ape, because they did do offerings with Ape, but then both of them got sold down. So you lost valuation on both. The true valuation was 239, right? So why wouldn't it be $23.90, you know? Well, they did a shift. And if you go back and you look at where those shift values are, they basically were using the values that they had set up here. I don't really want to, it sounds like I'm just rambling, and I am a little bit, but I can't promise you anything. I don't know. I shouldn't say I promise this is right. I don't know if it's right. But I'm like 90% sure that I did it right. So what that means is that it's a more accurate representation of what the value is according to the original price. So when you do add the chart shift back, and it's not, for some reason it's not like loading. For some reason I can't get it to like work. Like it's not visible. I'm not sure why. Anyways, what you find is that, I guess I can just take it off for now. And I can just show you with a bars pattern where it is. But what you find is that when you do the chart shift valuation exercise, these actually line up with, they line up with, and I'm just going to approximate it because I'm not going to spend time doing that. All of these valuation markers, if I got to get it right though, it's like right there. It's not quite at the gap, but it's like close to it. It actually lines up really well with a bottoming action here, which makes a lot more sense. So like retroactively, it's easier to use the formula and see where those numbers are, but you can use the chart shift, I guess, just to kind of visualize it. And I did find that that's where this inherited those creeks and stuff, like those creek values and other things. Like these were inherited values, inherited creeks, all this other jazz. So when we started looking at those motions, they make a lot more sense in light of a chart shift than they do anything else. They're having mini halts in the time frames. Yeah, I mean, anytime you see like a barcoding, that's not normal price action, but it's also probable that barcoding is really just an operator letting go, because most retail traders aren't trading like millions of shares at a time, so that's pretty unusual. So if I see barcoding, it's usually like they're basically not interacting with it. And then if you see like an intraday gap, that's not a good thing. That's not, operators don't do that. Like they don't leave liquidity like that. So it's important to kind of like take note of it. Yeah, I mean, like right now, just looking at this, like I could tell you right now, there's a problem of we didn't come back down and get this area. We backed up quite a bit, but this is what we were talking about earlier in the day. Yeah, it kind of landed right on top of that. And there is a weird like 1 minute gap right there. 288. But I don't know about halts. I think it just probably depends on your trading platform and how quickly they're updating it. Yeah. Like this kind of stuff is crazy. That kind of barcoding is pretty insane. But then again, you know, that's kind of where it landed. So maybe there's something to it. Yeah, a slightly longer time frame, like a 15 to 30 minute time frame. This might be the fair value gap right here, but on the 1 minute, it goes pretty low. Yeah, maybe like 30 minute or so, or longer, 1 hour. There might be one right there. That's fine. We can come back there. It wouldn't kill us. Yeah, there's even like a creek there, so I wouldn't mind being right here. That'd be fine. And then I wouldn't mind being up above like 295 in the close either. I'm not a big fan of the current stop levels. I think stopping short of this break here was really strategic. I don't see it as a good thing just yet. We really just, I guess what I'm trying to say is there's fire here, but someone's got to throw some fuel on the fire, you know? Everybody knows that guy that always tries to like throw lighter fluid on everything. Thinks it's going to solve every barbecue problem. This needs a little bit of that because right now it is accelerating and each one of these is walking up over the next. So you had like a 1 and then a 2 here. Those are the layers that I'll be looking at more often than not, like those two. And there's actually a really small one in between here. And then they get like minuscule where it's basically just pointless. They get really, really, really tiny. It's probably like a Fibonacci thing, right? Working its way out or in. But this this right here, where the rejection happened, it didn't actually go back into there. And each one of these has walked up. So you can see like that level, this pushed above it, and then this level, this pushed above it. We did this earlier. This pushed above there. And then right now, we've come above this top, this little ledge. So that's good. So we're making like higher highs. It's not that that's not happening. It's happening. But we haven't really accelerated very much. So if I were looking at this from this point of view, I would suggest that like this is kind of where I'm going with it, is that you have kind of an expansion here that's going on. I don't really want to see it continue to expand lower. We were talking about that earlier. It could survive 279, but it also could be a signal, early signal of potential distribution up top. So we have to be really careful. I don't really want to see it keep dropping lower. I want to see it make higher lows. So it has done that thus far. And it looks like this had backed all the way up to 281. But anyways, so you don't want to see like a horizontal build out, is what I'm trying to say. You don't want to see it build out this way on an expansion. I don't think that's very bullish. What we want to do is we want to kind of like check the box we need to check and then move up into a more of a vertical expansion, if you will, where we're essentially like climbing a ladder. And you can see that the key zone where that happens is our key breakout zone, which we still haven't touched. So we get a good green day, sure, but like I was saying, the very first thing is like we're not quite there yet. We really need to get up above here. And then you really have to show that you're going to hold that. Once it's in this zone, it should move pretty fast. Another way to do this, and I just kind of doodled this. I don't know if that's what's going to happen or not, but one way to do this would be to see it go up, and then each of these could be thought of as like support, resistance, support, resistance, support, resistance. I don't think that usually works out very well in the end, but you could do it that way where it's like hits here and then backs up just like it did back here. And then it hits here. Again, you can see why this is problematic because it have huge retracements, which we've had like 10, 15% retracements at times. Don't get me wrong. But this is like a bit of a way to do it where you could keep doing the same thing. It's not unreasonable, you know, to think that something like this does happen. Again, go back and look at the walkout for 2020 or something big. There's pretty huge 10, 15, 30, I think it was like an 18% retracement at one point, like pretty big drops. But you want to see that acceleration take place. And I'm not using every single trajectory here. So there's certainly also some missing pieces. And this one would go way, way, way up here. So that's the really big jump right there, potentially. And that's really as far as I normally would have taken it. That's like the halfway point. If it ended up going continually, I think you're going to see some serious parabolic stuff where we're probably not going to see it continually back up. We're probably going to see it just start really squeezing, you know, to the upside, for example. It'd have to do something like that, you know. So you wouldn't spend as much time. You might mark off like one level, one or two levels in the middle. Maybe right around here. But then it would just go. Does that feel realistic? Meh. But who could chart a straight up move, you know? Like, it's really hard to do. And a lot of that could happen in extended hours where you're just not seeing it. So this is what I mean when I say, like, it needs to kind of use the parallels as like a ladder to get out, as opposed to where do you see volume being? It's like 6.8 million per minute. Or something like that. I did a, I think guys are like, what? Why would you say that? I did a formula. I took the time and the total volume and I just did a simple like division. And every time it's done a big run up, at least in the past, and we don't know, it's a different operator, so it's different now. At least in the past, it was like 6.8 million per minute on average, which is really high. That's just an average, so I don't know. I have no idea where the volume goes. Do I think it could move on less or more? Yeah. I mean, more volume means more resistance. From A to B means more selling, not more buying. Because if it were just buying, technically if it were just a short squeeze even, and nobody was buying and nobody was selling, and everyone, the only people buying were just the shorts covering, you probably have a very like weak volume move. Most of the time shorts covering is like a very big flash in the pan kind of move, and it does not have the kind of volume that retail and operator buying, smart money buying has, which typically has a lot heavier volume, and then the heaviest volume is because of selling. So like one thing that you'll note is that even though the volume per, it's kind of confusing, but if you go back and you look at the January and the June moves, the June move actually has a lot more resistance, which means there were definitely a lot more sellers in the second move. As opposed to the first. If you just look at the volume for the move, it's a heavier volume move, or it's a heavy volume move, but it moves less. So there's more effort being taken to push it up. But on average, it's about the same. They're not really that different. They're pretty darn close. Right? So how else can you do stuff like this? Like, is there any other way to make sure you know? I don't know, man. I've got these lines going straight up, but for all we know, if it gets stuck, I do think it's possible. I'm not going to say it's not possible. If it gets stuck over here and it doesn't move going out in October, I think we're looking at a possible, really it's just a cat ear. If you start getting rapid fire up thrusts here and they're just not going anywhere, that's bad. Up around 320s especially, I think that's bad. But if it just goes, it should be pretty simple. You might get a big pullback here, but then it should just go. The only other thing I can do at this point, I've done everything. I've done, wave analysis, done Fibonacci's, I've done measured intro and outro on bigger waves. I mean, I've been doing this for like 2 years now. I said that I thought that this terminated around 316, that's where it jumps the creek, and that's kind of where it looks like it's going to happen. That had to do with the lower one. We've talked about that before, that wave being low instead of high. Look, man, if this shoots up to 15, and I don't know how that happens, but if it happens, I hope you guys make a lot of money and you have a lot of fun with it. I don't know if I'm going to be able to stream every time it moves, My goals are pretty conservative here. I think if it hits anywhere between really 6 and 8, I'm pretty happy with that move. And I would be looking for exit. I don't necessarily think I will exit all of it, but I'm definitely not going to be waiting for 15. If it happens, great. I'll have some, I'm sure, but I won't keep everything. And then locally, I'm really just looking at this area around 320. I think it's just the most important region. So you don't get anything if you can't get above the creek. So, I mean, there's nothing bad about today. My biggest concern has really come from GME's October 3rd thing and just worrying, I guess, maybe needlessly, but I am worrying about it, about just kind of getting hung up, at 32 going into the third. I don't think that could be that'd be a very positive thing. So, but we did do a lot of measurements on GME earlier, and there's still plenty of evidence that this ends up at like 46 to 50. And it could go way beyond. It might be a little like AMC, or it might be a little like it was here, where it somehow goes way beyond and then comes crashing down. I don't know. That's not stuff I'm going to try to predict. It goes 150, man. I'm not going to try to predict that. I don't think that's wise. I don't think that's wise, and I don't think it's very reasonable for the most part. When you take a look at the bigger picture here, I would just encourage you on AMC and GME to just observe the basics. Doesn't have to be like all this weird stuff. The basics here are very straightforward. If you look at the Fibonacci retracement from top to bottom here, there's a Fibonacci retracement to like $46. If you look at where that creek is now, it's at like $50, right? That's also like a really simple distribution level. It's not that complicated. This does match up with these parallels 1, 2, 3, 4. Yeah, that's true. It does have a lot of wave connections there. That's true. So I think it's a reasonable place. Does it give you evidence that if it did break there that it could go higher, Booksy? Yeah, because it's a break of the creek. And just like this one, although I wouldn't say they're 1-to-1, just like this one, notice that once it gets above that yellow mark, it's really where that gap is, right? Gap's way up here between this yellow region right here. It just kind of goes all the way to the top, the orange, which is probably like this 50-50 mark. So, if you were to do something similar to that, could you have like a similar move? Sure. That's the same move right there. course it is, because it's on the same parallel bottom. So is it possible? Don't you think it's possible that this could go all the way up? Well, yeah, it's possible. You know, I'm just not going to like count on it. It's like, I could totally see why that would make sense, you know, on one hand, but on the other hand, I'm like, that's just so far. Like, even if I thought something was going to squeeze or go crazy, I'm still going to look at things as if they're not. That's just me. That's just how I am. And I would rather be happily surprised than negatively surprised, right? I'd rather be like, "Ooh, wow, it went really high. I'm glad I held on to some of these calls," versus, "Oh, wow, it did not go high. It ripped backwards, and I'm not happy I held on to all these calls because now I'm losing money." You know what I mean? Like, or it went down after popping up here, and now I'm like screwed. You know what I mean? Like, that's not a good surprise. So, leave room for there to be like happy surprises. I don't think that it makes any sense to bank on something like this, especially when it's above the, you know, all-time top kind of thing. I don't know. To me, that's just like, what are you trying to do, you know? Why not? Why can't it go up there? Talk about cause and effect. I mean, it could. That's the crazy thing. I'm not trying to be like, it can't. I just think there's a way to maybe work through this in life where you're not building yourself up for something that's not really guaranteed, you know? There it is right there, man. There's the wave. See, you just got to believe. You just got to believe it's going to happen. Right there. That looks pretty convincing. Yeah, I know. Again, if it runs to 120, I'm done. You know what I mean? Like, I'm good. Do I think that's going to happen? I mean, if AMC goes to 15, maybe. Maybe. I mean, it's kind of the same move. 22. That's like 220, right? You just divide by 10. Up to 150 or 13 or 12, $14. It's probably like the same move. I mean, percentage wise. That'd be fun. That'd be a really good way for me to go out, like a mic drop. Hopefully I answered your question, Alex. You asked me a long time ago, and I forgot to. I don't know if I answered it. I kind of went around the. Didn't I go around the world on it? I kind of did. So, he super chatted me and everything. I think reasonably, like I said, I think this area, which is like a middle zone from $6 up to like maybe 7 or 8, that regional zone, that area is a really good padded zone. Like, I find it to be very, very likely if this breaks out for a lot of reasons, because that is the top of the range. It's a huge creek breakout. I mean, this is a 2-year long push against this creek. So I think it's entirely reasonable that pops really high to like 6. Whether it goes to 15 and then does like a 50% retracement or something, and it does come back down to those levels, I don't know, you know. We have to just kind of take it for what it is. If you think it's going to go and you've seen all the stuff I've talked about today, all power to you. I have to be very careful, and I will be very careful, because I don't want to be in a situation where it's doing some kind of a rug pull, and I was completely blindsided by it. You know, I had no idea that something like that is even possible. Like, oh, it's only bullish. You can't do anything else. That's silly, right? Oh, it's only bullish. It has to go to
$100. That's silly. It's only bullish. It has to go to 15. That's silly. Like, it just doesn't make sense. There's all kinds of possibilities. Probability says that these are good levels, and that's a plus. Probability says that 6, 7, good levels. That 12, 13, 15, good levels. They're mathematically solid levels. They have reasonable setups for them. The projected breakouts here, they're good. We just don't know what we don't know. And if something went south and it didn't break out till later, it could break out from basically the same level way over here at like 279, way out here in like December, and only go up to like 13. We'd still be saying the same thing. Good level, right? It's just that it lowered the target. You know? It changes things a little bit, but not enough that it's like impossible. It couldn't do that. Well, this makes a lot more sense to me right now to just go, and I'd be very happy to be right about that. I also think that it's reasonable that if it took longer, it would just be lower or whatever. Maybe it goes higher on the basis of the spring on the full move, but maybe it breaks from a lower point at a later time. We don't know. I said in the Discord I thought maybe 295 today if it didn't go low, and it's been up here. It's been at 296 most of the day. I still think there's room enough to kind of drop one more time. I'm liking this build out here. It looks fine. If it closes above here, I kind of want it to close a little higher, but we'll see. I don't know. If it closes above 292, I think I'd be pretty happy with that. So anyways, I got to get going. I really appreciate you guys hanging out. So again, Alex, thanks for your comment earlier. I know I addressed it, but I just wanted to address it again because I feel like maybe I didn't address it very well. And I'm really not used to streaming. Sorry. Been used to trading a lot, so by myself. By myself. With some people in our Discord who are trading alongside sometimes. But overall by myself. So, and that's it's going well. I told you guys I had a really good first 6 weeks. But that kind of ended. You're like, what do you mean? This is great. Next week could be like the best week of my life, right? But it could also just be like a nothing burger. So I'm trying to keep it pretty even keel. I'm not really thinking about it. This week ended up being kind of a crapshoot for me because I got stuck in some bad positions and I basically just scratched or got like slightly negative on them. I made like $1,000 like the first day and a half of the week. And I was like, yeah, this is a great week. I'm going to get out of all these positions before FOMC. But I wasn't able to. And some of my positions, I was like, no, they're red. I don't know what to do. Should I just exit? I'll just wait. And then they got crushed. And I learned some lessons there that were really important. I lost a lot of money on NVIDIA and then I gained most of it back, like 85% of it I got back, but it was still a red position by the end. And I was like, that wasn't really my fault. It was kind of the China news. And I was waiting while it was going sideways. I knew better. I should have just gotten out. I thought it could have popped before dropping. Instead it dropped before popping. So I read it wrong. It happens. But the China news really screwed me over, that gap down. So I was like, I guess I'll just average down and, because I still think it's going to come back up, but I don't know what's going to happen at FOMC. So I got fortunate. I'm very fortunate that it didn't stay there, but I still lost money on it. So this might end up being one of my first either flat or red weeks. I had one week that was like $100. I was like, whew, by the skin of my teeth. So, but it's okay. I need to be able to have room for that. If I have a red week, okay. You know, let's move on. One red week isn't going to kill you. When you've had 5 or 6 green weeks, one red week is not bad. You just can't make a habit out of it. And your red week can't be so bad that it just blows up your account. So we'll see. Yeah, more liquidity, right? Rate cuts equal more liquidity. That's really the big picture. So they may not equally distribute everything to all stocks, right? All your favorite stocks, but on the whole, more liquidity is better and tends to give us a little more of a bullish market. We don't know what's going to happen with everything else. So obviously the jobs problem is a problem. And I think Powell said it best when he said there's really no risk off approach at this point. They're kind of doing it because they had to do it and they knew that it was a preemptive kind of thing. Like you're like, no, it wasn't. It was late, man. He's too late. I don't care what you guys think politically. The point is from his words, it was needed, but it was also like there was still a fairly split decision. I mean, it sounded like they barely voted it, which is kind of interesting. So there's still concern by almost half of the board, right? And that's their job, you know, to try to make sure that things don't go south. And they don't always get it right, but so we don't know. We don't know what we don't know. We don't know how tariffs are going to end up with court decisions going into Supreme Court. We don't know what that does to the economy, good or bad. You can make guesses. But rate cutting cycle, overall positive. The market almost always is higher a year later after rate cut cycle starts. So, because again, more liquidity, more cash means more people buying. But I do have to go. So I really do appreciate you guys. I'll be on Monday if it's gapping up and we're going. If we're just kind of chilling out, I don't know. I may not be on. But I appreciate you all nonetheless. Appreciate you sticking it out with me. And we'll talk to you later.